So, students, very good evening to all of you. Good evening, students. For this very important, the chart-based revision session that I'm going to have with all of you. So, students, I will just very quickly will tell you about our total duration of our lectures and all, so that every one of you are clear about this. This is an English particular revision session. Many students are saying that, sir, what about Hindi? Hemant, good evening, Hemant. So English I'm doing live. The revision class I'm doing live. Okay, chart-based revision. Out and out, students, in all there would be a 40 hours, I can say 40 hours class. Only on weekend, Saturday and Sunday. Only on weekend, students, Saturday and Sunday. Same time. Saturday would be in the evening, 5 to 10. You'll say 5 to 10, this would be huge. Palak, Jade. So many students are saying, so 5 to 10 would be huge. I'll give you a break in between, don't worry about that. So that is how it would be. And only Saturday and Sunday. So maybe you can say 40 hours, you can just count. So Saturday 5 to 10, Sunday in the morning 7 o'clock to 1 o'clock. It is live, Himanshu, it is live. So English I'm doing live. Hindi I'm giving the recorded lectures. So again a YouTube lecture, primarily that will be given to you. You all know the link of the same. Now the chart which is there, students, it consists of everything. All the topics are covered, students. Hear it. All the topics are being covered, students. Can you see that? Every topics are covered in this particular chart. So transfer pricing, everything, means whatever it is. Also, students, we have included the case laws also at all the appropriate places. The case law, students, many of you are worried about the case laws part also. Rinky, isn't it? So in that context, Hemant, international taxation for paper 7 or paper 6E? So for this particular cases like NR taxations and all, everything is there. Everything is there, students. Fine. Amendments are also captured. So you all know in the red mark, the amendments are there. Bilkul. That is already ready. Tuesday, Wednesday, you will get it in Hindi. Hemant. Meenakshi, good evening. So, can you see that, students? All of you, can you see that? Here, this is what it is, students. Fully, it has been completed for your requirement. The reference of Chunni Babu also has been made wherever required, just to lighten up the moment. सारे topic students covered हैं इसके अंदर. Every topic has been covered. Okay, so nothing has been left. Primary students, math, everything. Now also, sir, what about practicals? See, obviously it's a chart. So to expect a practical is a difficult thing, but I understood that even many students will say that at least some important practicals would have been there. Yes. So the important questions on practicals I have captured it. Can you see that? Like here, if I have to say about alternate tax regime. So some of the questions you will find in the chart also. Some of the question you will find it in the chart also. Can you see this one, students? So that exactly it is, students. This covers your entire thing. Total how many pages? Many students are asking, sir. How many pages are there in this chart? 163. 163. TDS, TCS, everything, including the circular. Latest circulars are being captured here, students. So, 800, yes, Hemant. True. Surrogate taxes has been covered. What topic? You don't have taxation of dividend. Can you see that, students? Now in taxation of dividend, students, if you can see, even the practicals has been covered it over here. In the taxation of dividend, students, even the practicals which are being there has been covered it over here. So students, that is what it is. So topic on salary, some questions on amendments, some question on amendments, students. Yes, I will be doing this, Sajjad, I will be doing that. Okay. So that is what it is, students, in this context. I hope that all of you are clear with this one now. Every one of you are clear with this one. So students, in this scenario, this is what it is. Penalty, students, which is again an important topic which would be there. I would be doing a lot of interlinking, students, in my exam. Rinky, at least I'll say the practice is a key, because MCQs of the ICI questions are a bit difficult to digest herein. So anyways, I will be doing also the case study, the new case study of the ICI. The new case study of the ICI also would be discussed, students. Yes. So new case study of the ICI, students, which has been there, also would be there in my lecture. But I should tell you one thing, students. In my lecture, I should tell you one important thing. I would be discussing definitely the MCQs. I'll capture the MCQs in my discussion. मैं MCQ को अपने discussion में लेके चल रहा हूँ. It's that in Hindi also, in English also. I am capturing my MCQ discussion also. Means I will be capturing that relevant point, whatever is a relevant point to be discussed, and that is what I am going to do. Are you? So it is not like a plain reading of the provision. Don't expect that it's a plain reading of the provision. नहीं, ऐसा नहीं होगा. I'll be doing a lot of interlinking of the provisions and all. Along with that, the MCQs which are being there, I'll be putting across some important points and all. Now, students, any case, the video would be there for your reference. You all are aware. Yes, fast track to 24th cha raha hai, 24th chayega. The video would be there for your reference. Many students are asking, sir, from where we get the chart book also, isn't it? This chart book which has been there, students, the chart books you can order it primarily, wherein I can just give you the number, those who want to get the hard copy of the chart book. So for that, I'll just give you this particular thing. So the booksellers who are being there for the purpose of chart books primarily in this context, the bookseller, contact the bookseller, students. The bookseller contact, I'm just giving you the bookseller contact, wherein you can just get the chart book. Okay. So the bookseller contact detail. So the bookseller who are selling the chart book, you can contact them through WhatsApp. So they will assist you for the book purpose. So this is for the book purpose, which I'm just giving you the details. Okay. So those who want the chart book physical copy, they can just take it from there. So you can call them and accordingly get your copy. Now, students, today's topic, I will go with the sequence. So today's topic, I will definitely target the every topic will be covered. So today's topic, students. Perfect. Yes, Gaurav. Milegi. So students, today's topic, I'm going to start with PGBP. Today, tomorrow, because obviously PGBP is a topic which I'll try to do with this one, because some of you may not have the PGBP today, Rinky. So today I'm going to target the PGBP and all. Okay, students. So that is my first topic, which I'm going to discuss it out in this context. I hope that all of you are clear with this one now. All of you are clear with this. Shall we start, students? Any other queries, students? If you have got, please do ask me. Any queries, students, you may have, please do ask me right now because then I'll take any queries, if at all it comes to you in between. I'll take across only the topic-wise query. Any queries that may come in between to you, I will take only the topic-wise query, students. Is that clear to all of you? Let's start then. Yeah, amendments are also covered. Obviously, I'll be covering the amendment also. So it is not that by default the amendment will get also covered. All the charts has got the amendment also, students. All the charts has got the amendment. So I have to discuss the amendment. I cannot do away with the amendments part. So just make it clear in this context. So students, in that particular context, students, let's start with this one. Just give me 30 seconds, students. Let's start. Now, students, I'm starting with this one. quickly, students, all of you, in fact, always keep in mind, always also have your notebooks and all, like textbook or whatever be the materials. Always keep those materials also along with you. Students, the first one is a tax rate. Don't worry, I'll just be enlarging the font. The tax rate, students. So far as the tax rate is concerned, if you see, generally all the tax rates are the same. I'll just go very quickly to all of you, students. If you all see the tax rate in this case, fine, students. So in this situation, students, in this particular situation, the rates, all of you are aware, up to 60 to 80 years, so 3 lakhs. So just quickly going through that, between 3 lakh to 5 lakhs, what is the rate? This is for senior citizen. That is the 5% rate. Thereafter, between 5 lakh to 10 lakh, students, the rate, as you all are aware, that is 20%. And then about 10 lakhs, it is 30%. So I think the rates are, every one of you are aware of it. This is for senior citizen. If it is a super senior citizen, students, then up to 5 lakhs, it is nil. Up to 5 lakh, it is nil. Between thereafter, students, you all are aware, 5 lakh to 10 lakhs. 5 lakh to 10 lakh, students, in this context, if you see, 5 lakh to 10 lakh, students, if you see, students, in this context, it is 20%, and about 10 lakhs, it is 30. Now, for a normal particular person, students, up to 2.5 lakhs, it is, you all know, nil. 2.5 lakhs to 5 lakhs, it is 5%. 5 lakhs above, 20, and about 10 lakhs, it is 30%. So this is what it is, students, as far as this particular point is concerned. Now, let's rebate, students. As you all are aware, be very careful, students. This is the rebate which is applicable for a resident individual. Thoda careful, hai na, students. This rebate is applicable for whom? For only the resident individual, students. Now, what is the implication? Students, at two places, I'll tell you only one thing. All of you will, in fact, take a note of it if they want it. I'll just be very careful about this particular part. Yeah, you can, Vyati, you can try to supplement with the amendments. That also can be done. You can supplement with the amendments wherever required. Okay, Vyati. Raghav, let's start. So here in student, if you are a resident individual, so please keep in mind, students, then only the rebate of 87A is available. Then only the rebate of 87A is available, students. Isn't it? I should tell you that at one more place, the emphasis is made on the resident individual. There is one more place where the emphasis is made on what? On the resident individual. Are you aware of that? Which is that place where the emphasis is made on resident individual? Students, this is about the LTCG. This is about what? The LTCG of 112. The LTCG of 112, students, that is one of the aspect. LTCG, I hope that all of you are aware of this one. Are you aware of this one, students? Not aware? Nevertheless, I'll explain, students. Just pay attention, students, because these are the important calculation areas wherein students make a lot of mistake. Students, let me give you the example then. Just pay attention to this particular part. So, resident individual. So, you are a resident individual, students, in this case. And for a resident individual, one very popular question comes. Are you aware of that, students? Please pay attention. That popular question is in respect of. It is in respect of that supposingly, students, there is a person, Mr. A. Mr. A, he has got house property income net of say 2 lakhs. LTCG, students, he has got say around 1.5 lakhs. This is his total. That's it. Nothing else is there. So, students, obviously, when you have to compute the tax liability of Mr. A, in that particular case, students, as you all are aware, that in this case, the 2 lakhs of the house property, you will be adjusting with the basic income limit. So, basic income limit is how much? 2.5 lakhs. Now, you will adjust this with 2 lakhs of the house property. The house property income of 2 lakhs. Still after that, students, there is unabsorbed basic income limit. 50,000 would be the unabsorbed basic income limit. Now, please pay attention. What is 112? Section 112 says that in the case of a resident individual, students, what we will do, this LTCG of 1.5 lakhs will be allowed to be adjusted with the LTCG, students, of this 1.5 lakhs in my question. Will it be allowed to be adjusted with the unabsorbed basic income limit? Answer is yes, it would be. And thereby you have got the net LTCG of 112 is 1 lakh, and accordingly you will have 20% tax rate applied on 1 lakh. This facility, students, is available for 112 long-term capital gains. This facility is available to 112 long-term capital gains. Can you tell me, students? All of you tell me one thing. Students. There is a long-term capital gains of 112A. Please pay attention to my question. Or I think I need not explain to you what is this 112A long-term capital gains. All of you are aware of this 112A long-term capital gains. The long-term capital gains on the transfer of the equity shares or equity-oriented mutual funds, isn't it? And now even the unit of the REIT is also covered. So on that, students, we all are aware that a special computation is to be done under 112A, and as per that particular computation, students, in this case, we will have to compute the long-term capital gains without allowing the benefit of the indexation. Without allowing the benefit of the indexation. Okay, and that the long-term capital gains in excess of rupees 1 lakh, will be taxed at the rate of 10%. The long-term capital gains in excess of rupees 1 lakh, will it be taxed at the rate of 10%? To that the answer is yes. Okay, you'll calculate a tax, 10% will be the rate. My question therefore to all of you is this, in this context, whether, be careful, supposingly 112A, in the same question if this would have been 112A, okay, my question to all of you is this, that whether the unabsorbed basic exemption limit of 50,000, whether the unabsorbed basic exemption limit of 50,000, will it be adjusted against this long-term capital gains of 1.5 lakhs? Will it be adjusted against? Sunny, I've already given you the number in this case. This is where you will get the chart. Yash, those who have just joined in, for them, again I'm repeating, the chart you can order it from this particular WhatsApp number. Okay, you can order from the bookseller. From this WhatsApp number, you can get the chart. So again, I'm repeating the question for the final time. If this long-term capital gains are substitute of 112A, if I substitute this long-term capital gains of 112A, then whether the unabsorbed basic income limit of 50,000, whether that can be adjusted against the long-term capital gains of rupees 1.5 lakhs, the long-term capital gain of rupees 1.5 lakhs, so that the answer is no. If this is the LTCG of, if this would have been the LTCG of 112A. So therefore, students, the final point which I just wanted to share with all of you is this. Richa, Yash, yes. So this is the difference, fundamental difference. 112, you will adjust 112, resident individual, adjust what? Adjust the basic income limit. The basic income limit. 112A, no adjustment. This is the net result. No adjustment. So please always compare this with this also. So this is one of the points which I will try to interlink always. So interlinking is important, students. In all these cases, you all are aware, interlinking is so important. I hope that all of you are clear with this one. If that be the case, students, again I am repeating this particular point. Resident, yes, Richa, resident individual, students, resident individual, they get rebate of 87A. Resident individual, they get rebate of 87A. Resident individual, they also get the advantage of adjusting the unabsorbed basic exemption limit against the long-term capital gains of 112. Against the long-term capital gains of 112. Against the long-term capital gains of 112. What about the long-term capital gains of 112A? Not available. What about the long-term capital gains of 112A? Not available. I hope that these small things really will help you to take it really to the next level. Surcharge, students, I think all of you are aware of this one. Surcharge 10% where it is more than 50 lakhs. 15% where it is more than 1 crore. Then higher surcharge of 25% and 35%. Always keep in mind. Higher surcharge is this. Students, one part of surcharge I should tell you. The surcharge rate remain the same. Surcharge rate will remain the same if you are talking about the alternate tax regime. In the alternate tax regime, students, are you aware of it? In the alternate tax regime which is applicable for individual 115 BAC, alternate tax regime which we'll do later on, at that point of time also always keep in mind the rate of surcharge remains the same. The rate of surcharge remains the same. What about the AMT, students? What about the AMT? Whether the rate of surcharge, will that also be the same? In the case of AMT calculation, this slab rate of surcharge in the AMT calculation also remains the same. Only one difference is there, that in the AMT, the threshold of 50 lakhs or 1 crore or 2 crores or 5 crores is to be considered in respect of what, students? The threshold of 50 lakhs, 1 crore, 2 crores or 5 crores is to be considered, students. The threshold of this particular level, 50 lakhs, 1 crore, 2 crores or 5 crores is to be considered for adjusted total income and not for total income. For adjusted total income and not for total income. So the surcharge rate for AMT also is same. Surcharge is the same for AMT also, but only thing is that in AMT we compare adjusted total income with that threshold of 50, 1 crore, 2 crores and 5 crores as the case may be. With that particular threshold of 50, 1 crore, 2 crores or 5 crores as the case may be. I hope that all of you are clear with this one. Okay, now other special points, as and when it will come, I will keep on doing this. I'll keep on comparing this. Students, see, this is a revision lectures. So please, revision lectures has to be interlinked. You cannot, problem of the students, I'll tell you the biggest problem of the students in the examination. Problem होता क्या students कि हम लोग independently सब पढ़ते हैं. We read everything independently. Okay, in the examination you all are aware, everything gets clubbed, everything gets merged. So I'll also make an attempt wherever possible to interlink the things in a way that they are going to be targeted in the examination. I understand that AMT topic I will be doing later. I understand that the capital gains I'll be also be doing later on. But if resident individual word is mentioned for rebate of 87A, it is also my duty to ensure to stretch this resident individual concept. What are the other special provision applicable to this resident individual so far as the tax rates are concerned? So far as the tax rate is concerned. Now students, in this chart, the first chart that you are doing, in the first chart you will not find, the alternate tax rate. For alternate tax rate, there is a separate chapter. In that itself, the charts of alternate tax rate has been given to you. So I am not giving the alternate tax rate chart here. It is there in the separate chart later on. Cooperative society, students, can you see this? AMT point, I am repeating it one more time. AMT point, students, I am repeating it one more time. The surcharge rate of AMT is the same, which is 10%, 15%, 25% and 37%. The surcharge rate is the same for the individual. However, that 10% should be for when the adjusted total income is more than 50 lakhs. Similarly, this 15% will be when the adjusted total income would be more than rupees 1 crore. Similarly, this 25% will be when the adjusted total income would be more than rupees 2 crores. Is that clear to all of you, students? So the focus on the surcharge, the rate of surcharge is the same. The threshold is also the same, but that threshold has to be applied not for the total income. It is to be applied for the adjusted total income as far as AMT is concerned, because in AMT we are calculating the adjusted total income. I hope that all of you are clear with this one, students. Clear, students? Shall we proceed, students? Perfect. Okay, cooperative society, students, these are the rate. And what about the surcharge for cooperative society? If it is more than 1 crore, 12%. If it is more than 1 crore, 12%. Fine. How about partnership firm? Rate is 30%. Rate is 30%. And if the total income is more than 1 crore of the partnership firm and the local authority, same thing. The rate of surcharge would be 12%. Last, for the company, students, company, I'm just talking right now about the normal rate. For the company, students, domestic company, the first is your domestic company, students. The first is your domestic company. So if you are a domestic company, students, in this case, we all know the normal rate. Let's forget for the time being alternate tax regime. I'm not even right now interested to discuss alternate tax regime. I'm just talking about the normal tax rates. So domestic company has got two normal tax rate. Which are those two normal tax rate? One is the 30% rate, another is a 25% rate. Be careful. I am not right now interested, Palak, to discuss. To discuss what? To discuss the alternate tax regime. Forget alternate tax regime. Forget 115BAB. Forget 115BAA. Forget your friends. Forget your boss for the time being. And just focus on the domestic company. And for the domestic company, students, we all are aware that there are two rate of tax, and those two rate of taxes, one is 30% and another is, students, 25%. You'll say, sir, 25% in which case? When for previous year 21-22, your previous year, students, is 21-22. So if the total turnover of previous year 1920, last to last year, previous year 1920 is up to 400 crores, then in that particular case, for the domestic company, the rate of tax would be 25%. For the domestic company, the rate of tax would be 25%. I told you, I'm not interested to discuss with you the alternate tax regime, although you can see the provision. Foreign company rate is 40%. I think that is the case. What if, students? Yes, that level will always increase. Students, my point to all of you is that in the foreign company, students, in the foreign company, as you can see, rate is 40% for the foreign company. Here my next question to all of you is this. Please pay attention, students. What if the foreign company has its poem in India? What if the foreign company has its poem in India? In that particular case, if the foreign company has its poem in India, then it becomes resident in India. If it becomes resident in India, then what is the tax rate of that foreign company? If the foreign company becomes a resident in India, then what is the tax rate of that foreign company? Only 2 seconds. If the foreign company becomes resident in India, then in that particular case, what is the normal tax rate of the foreign company? Rinky? The normal tax rate of the foreign company where its poem is situated in India and it becomes a resident in India is 40%. Is 40%. You'll say, sir, how come? He's a resident. The residential status is Vyati relevant only in respect of determining the scope of the total income chargeable to tax under the act. कितना total income इस act में charge होगा? That is the relevance of what, students? Relevance of this particular that is the relevance, students. That is the relevance of the residential status of a company. But at what rate it will be taxable? That depends upon whether the company is a domestic company or a foreign company. Is that clear to all of you? Will you not make any mistake now in the examination? If that is the case, I am now proceeding further, students. With your permission, now the surcharge for the domestic company, and the surcharge for the foreign company, I hope that you all are aware, 7% up to, when the total income of the domestic company exceeds 1 crore and 12% where the total income exceed rupees 10 crores. Other than domestic company, it is 2%, again more than 1 crore, 5% more than 10 crores. Just very quickly students, 2% and 5%. Threshold amount is the same, but the rate is 2% and 5% for a domestic. Foreign it is, 2% and 5% is for foreign. Domestic it is 7% and 12%. My next question students here is about what if the MAT is applicable. If MAT is applicable, then whether the surcharge rate, does it changes? If MAT is applicable, quickly students, I will not be discussing this surcharge point in MAT. This is where it has to be discussed. If MAT is applicable, then whether the rate of surcharge, does it change? The rate of surcharge remains the same. The rate of surcharge, students, remains the same. Okay, so it says then what changes? Even the threshold amount of 1 crore and 10 crore, even the threshold amount of 1 crore, 10 crore remain the same even in the case of MAT. What changes is that instead of the total income, in the case of MAT, we do book profit. What changes is only that the comparison has to be done vis-a-vis the book profit. That is, if the book profit is more than 1 crore or if the book profit is more than 10 crores, on that basis, the rate of surcharge, is decided. Fine. In the alternate tax regime for a company, we have got two sections, 115BAB and 115BAA. Although I must say that alternate tax regime is applicable only for a domestic company. Foreign company, do we have alternate tax regime? Answer is no. We don't have any alternate tax regime, only domestic company has got it. When we do the alternate tax regime under the provision of 115BAB or 115BAA, what about the surcharge? In the alternate tax regime, students, in the alternate tax regime, what is the surcharge? Same threshold are the same? Is the threshold rates are the same, students? Think about it. Now is the time to think. अभी तो समय आया है अल्टीमेटली स्टूडेंट्स बर्बाद होने का. नहीं तो एग्जामिनेशन में बर्बाद होना नहीं है हमें. अभी बर्बाद हो जाओ जितना बर्बाद होना है. Tell me this then, whether this rate of surcharge is the same when we do the alternate tax regime, whether the rate of surcharge is the same if we do the alternate tax regime. To that, students, to that you should be aware. Then what is the rate of surcharge? What is the rate of surcharge if you are opting for the alternate tax regime? I'm talking about domestic company opting for students 115BAB and 115BAA. All of you say 10% is mandatory. 10% is mandatory on the base rate, irrespective of the total income. Irrespective of the total income of the SSE. So, irrespective of the total income of the SSE, the surcharge is always at 10%. Now, here is therefore important point. Please ensure, students, when you do the alternate tax regime for an individual, please tell me 115BAC, when you do alternate tax regime for an individual, at that point of time, is the surcharge rate mandatory for an individual irrespective of the total income? Is the surcharge rate mandatory for the individual irrespective of the total income? Answer is no. As far as the surcharge is concerned, for an individual students, that will depend upon whether it crosses the threshold amount. That will depend upon whether it crosses the threshold amount of 50 lakhs, 1 crore, 2 crores or 5 crores respectively. But when it comes to the domestic company opting for 115BAA or opting for 115BAB, at that point of time, students, the surcharge rate will always be mandatory, and that is at 10%. Is that clear to all of you, students? Is that clear to all of you, students? That exactly is the point. Now, students, this is what it is. Yes, so always keep in mind, although I will be revising this point one more time at the end, when I do all the surcharge, I'll do a final surcharge clubbing, but it is important that you don't you don't register this rates at one go. ये हमेशा ध्यान रखना, ये रेट आपके दिमाग में एक बार नहीं बैठने वाला है. It has to be repeated 2 or 3 times at different time, at different circumstances. You only when go through those things at 2 different time in different situation, only then these rates gets registered. Otherwise, I'm telling you students, it is very difficult to get those rates in your mind. Now students, as you all know, these are the normal rates, whatever we have discussed just now, where the normal rate. Apart from the normal rate, there are special rates. What are the special rates applicable? So the special rate applicable, students, 30%. Quickly we will discuss this one. 30% is 115 BAB. 30% is 115 BAB. Major one, anonymous donation. These are the major one. 20% students, please be careful. 20% major rates, special rates are in respect of in this context are in respect of BAA should non-resident sports person, this is sports person. After that students, foreign company 115A, this we will discuss it students. 115A, very important provision students, as you all are aware. Very important provision. 20% rate is applicable there also. So herein, so in this particular context students, additional buyback tax again 20% for buyback tax. Buyback tax again 20%. Okay, what about 15% students? 15%. The notable questions are 115 BBD. That foreign company receiving from foreign company dividend. Which foreign company? The foreign company in which the Indian company holds 26% or more of the equity share capital. The Indian company hold 26% or more of the equity share capital. In that particular case, the dividend which I have received from that particular foreign company, on that dividend students, it is at 15%. On that particular thing, it would be 15%. And then in that scenario students, in that particular scenario students, in this situation, 111A short-term capital gains 15%. 111A 15 short-term capital gains 15%. I think that is these are two important 15% rate. Keep in mind in the examination, it will come in the examination students. In the examination students, it will be there in this context. So in this scenario students, if you say 15%, yeah. So now coming to the 10% rate students, the main point are 115 BBF students. Many students are not aware of 115 BBF. I am going to do non-resident taxation. In that non-resident taxation, I am going to discuss with all of you royalty taxation. While I do the royalty taxation at that point of time, I'll tell you and I'll take you through one important chart of the royalty taxation both for resident as well as non-resident. Very important for your May 22 November 22 attempt. Royalty taxation for resident as well as non-resident. Very, very important students. Do you got this one students? So this is how it has to be considered. So any case, resident earning a royalty income. Which royalty income? That royalty income which satisfies the condition, which satisfies the condition of, which satisfies which condition students? Which satisfies the condition of, as you all are aware. You all are aware students in this case. Which satisfies the condition of 115 BBF. That is what students in this case will be taxed at 10%. That is what will be taxed at 10%. I hope that all of you are clear with this one now. All of you are clear with this one. Then ADR and GDR is also going to be there, but I'm not going to discuss ADR and GDR here. I'm going to discuss ADR and GDR at the appropriate places. Fine. So now students, in this context, coming to the next particular part, house property. You'll say, sir, you'll be discussing house property students. House property, yes students, I'll be discussing this. You want me to discuss house property or not? Tell me students, will you want me to discuss the entire chart or selected? Up to you students. House property, shall I do it? Your command, your wish, my command. Quickly, students. I'll give you 30 seconds time. Want me to do house property? Tax set is over, students. Tax sets are over. Rinky? Yes? Let's do this quickly. We'll say about how much time you will take. Vyati? I'll take around, 15-20 minutes. We'll discuss it out. Okay, fine. Let's discuss this one out, students. Students, in the head house property, what is the question that you expect in the examination? In the house property, in this context, section 22 is the charging section. As you all are aware, students, section 22 is the charging section. In the examination, if they will ask you, I frankly feel this is what they will target. And one is 23, that GAB is nil. Frankly speaking, I should tell you that this is what I consider this to be very important. Students, section 22 is a charging section for house property. Yeah, Balak. Section 22 is the charging section of the house property. What it says, there are 3 conditions to be satisfied. If you satisfy the 3 conditions, then the annual value of the house property will be chargeable under the head house property. Annual value. What are the 3 conditions? First condition, students, is the assessee should be the owner. Purna, assessee should be the owner. Second, the property should consist of building and land appurtenant thereto. Building and land which is appurtenant thereto. Appurtenant. And the third one, students, is that the assessee should not be carrying on the business in that house property. The business, assessee should not carry his business. Assessee should not carry, students, his business in the house property. His business in that house property. In that house property, students. Assessee herein, building and land appurtenant thereto, ownership, building and land appurtenant thereto, assessee should not carry his business in that house property. In that house property. So, students, if all the 3 conditions are satisfied, students, one is the ownership, second is that building and land appurtenant thereto, and the third one is the assessee should not carry his business in that particular house property. If all the 3 conditions are satisfied, then the annual value would be chargeable under the house property. Very simple. Students, here you should always keep in mind 2 particular examples. Always keep in mind 2 examples. In your examination, always keep in mind 2 examples for this particular charging section. In this case, students, in this particular case, if there is a person, if there is a company whose business is to develop the house property and let it out. Develop and let it out. In that particular case, students, develop and let it out. In that particular case, the rental income that is earned will be chargeable only under the head, only under which head, students? Only under the head PGBP. Why? Because my business is to develop and let out. My business is to develop and let out. And that is the reason why, students, that is the reason why, if my business is to develop and let out the house property, students, in this particular case, we will say that the annual value will be chargeable under the head house property. The annual value will be chargeable under the head house property. That is point number 1. Point number 2, students, second particular point in this context. The second particular point, students, is if my business is to develop the house property for sale. If my business is to develop the house property for the sale, then that house property is held as stock in trade. That house property is held as stock in trade. And if it has been held as stock in trade, any let out of such stock in trade which gives rise to rental income, then under which head the rental income will be charged? Will it be charged under the head house property or will it be charged under the head PGBP? It has to be, students, PGBP and not under the head house property. It has to be under the head I've done the reverse one. It has to be under the head house property and not under the head PGBP, because my business is developed for sale and not developed for let out. So if my business is developed for sale, then letting out of the house property, the rental income out of that, will be chargeable only under the head house property. I cannot be said that by letting out of the house property, which is held as stock in trade, I am doing any business in that. I cannot be said that by letting out of the house property, I cannot be said that I am doing a business in that. So please be very careful in this one. One thing which has been there, students, one very quick, one only point, students, I just want all of you to capture this one. House property, primarily, house property held as stock in trade. This is a question. Held as stock in trade. This is a question. Answer is yes or no. Answer is yes or no. If the answer is yes, then the let out primarily here would be the rent would be charged under which head? Under the head house property. If the answer is no, then in this case, if the answer is no, whether, please write here, whether the SSE can establish, please copy it on this one, that whether the SSE can establish that its business is to let out the house property. This is a question mark. Again, the answer could be yes or the answer is no. Answer could be yes or answer could be no. So if he can establish, students, that his business is to let out the house property, so what I'm going to say, rent would be charged under which head? Rental income would be charged under which head? Under the PGBP. And if he cannot establish, that the business is to let out the house property, then the rent will be charged under the head house property. Students, please always keep in mind in this point. You'll say, sir, there is some chart also you are making. Yes, this chart I cannot see. These charts are the revisionary charts. Okay, all the contents are there, but still I will try to make some few notes and few charts with all of you. Although the same content is there, but a summarization of our discussion in the class. Why? Because this is important to do a lot of interlinking together. So again, let's revise this one. House property held as stock in trade. If the answer is yes, then the through let out, whatever is the rent, it will be under the head house property income. And if the answer is no, students, that it is not held as stock in trade, then the question to be asked is whether the SSE can establish that its business is to let out the house property. Again, if the answer is yes, that my business is to let out the house property, it will go under that PGBP. If you say no, my business is not to let out the house property, then in that particular case, the rent will be under the head house property. Please confirm all of you are clear with this one. Quickly, I give you only 10 seconds. Every one of you are clear with this one? one case law which I expect to come in your examination. Students, one case law. Congratulations, students. I am telling you the question papers, which I should not be discussing it, but nevertheless, one case law which I expect to be there in your examination. Raj Dadarkar and Associates. Raj Dadarkar and Associates. Heard of the name? Supreme Court. Covered by the ICI. It's not that these case laws are my own case laws. These are all the ICI case laws. So Raj Dadarkar and Associates, students, what has happened? This was a partnership firm, and the partnership firm has let it out. Students, the partnership firm has got one building. That building was given on rent. Now, students, the partnership deed actually provided that what the partnership deed said, that the partner will decide how to use this particular building from time to time. How to use that building from time to time. So the deed was not specific about the manner in which the building will be used. The deed was not specific about the manner in which the building was used. So the partnership deed said what? The partner will decide. Partner will decide about the manner in which the building will be used from time to time. Point number 2. Students, point number 2. Point number 2 was the partners also failed to establish that their main income is from the letting out of that particular building. The partners also failed to establish that the main income of the partnership firm is from letting out of that particular building. So the question to be answered by all of you is this. Please answer this question. The rental income which is earned by the partnership firm will be assessed under which head? Under the head PGBP or under the head house property? Under which head? Under which head it should be chargeable? PGBP or house property? And it was being held that it will be charged under the head house property and not under the head PGBP. Why is it so? Why house property? Tell me one thing. Was the partnership firm holding that house property as a stock in trade? No. Answer is no. So therefore, answer was no. So it will come under here. Now, from the facts which has been put forth before all of you, please tell me, could you think of it, whatever facts are told to all of you, could you think of it that the partnership firm is carrying on the business, the business through that particular house property? Are you getting the feeling that the firm is carrying on the business? Neither the deed provides that the business of the firm is of letting out of the house property. Neither the deed provides that the business of the firm is letting out of the house property, nor what, students? Nor the partnership nor the partners could establish that their main income is from the letting out of the house property. That the main income of the firm is from letting out of the house property. So it can be said clearly that the business is not of letting out of the house property, and therefore if the business is not of letting out of the house property, then the rental income or the lease income will be chargeable under which head? Under the head house property. The rental income or the lease income will be chargeable under which head, students? Under the head house property. I hope that all of you are clear with this one, students. All of you are clear with this one, and that exactly how the things will be considered over here. I hope that all of you are clear with this one, students, now. So this is one of the point. Now, students, all of you very quickly, I'll take you through to computation of house property income. See, this computation of house property income, how they can target in the examination. In this context, herein, students, in the competition, if you see, how we will be in a position to deal with this one, students, in this context. Please be very careful. In this particular situation, students, if you all be very, very careful about this one. In the examination, students, I've seen ICI, you can get house property income through the double taxation relief 1991. They will tell you about, be careful, students, they can tell you about the foreign house property from which you are getting a rental income. So they can target, students, house property. Please pay attention in this contest, that they can target, students, the foreign income through this particular aspect about the foreign house property. So tell me one thing, if you have got foreign house property, how you are going to calculate the income from house property? The calculation will be the same. No difference. I am a resident, students. I am a resident. My world income is taxable. I have got a foreign house property. Okay. So accordingly, my computation of house property income will be the same. No difference. GAV, less municipal tax paid. NAV, thereafter the standard deduction. Standard deduction. After that, interest on the borrowed capital. I'll get my income from house property. Only one thing which I will tell you here in the house property topic is that from the TT buying rate, because the foreign house property would be in the dollar, the rent I will be receiving in dollar, and if I have from dollar, if I have to convert into INR, from dollar if I have to convert into INR, then TT buying rate as per rule number 115 will be the last day of the previous year. The last day of the previous year is what has to be taken into account. You will say, sir, this thing doesn't come in the examination. Do you want to bet this thing doesn't come in the examination? Check out July 2021 new course paper. All of you check out July 2021, the new course paper. There you will come to know, students, what is that you're going to come to know? That it is the case for, students, there they have clearly given you a salary income and the TT buying rate was being given. And this is where you should be very careful. If there's a foreign house property, competition remain the same. No difference in the competition. You will do the competition of the income, house property income in the normal way. Okay, only one difference, students. The foreign house property will have a rent in the foreign currency. That foreign currency needs to be converted into INR. And how do you are going to convert into INR? INR conversion has to be done in this way. INR conversion has to be done in this way. Which is the conversion rate? Students, which is the conversion rate? The TT buying rate as on the last day of the previous year is what has to be considered for the purpose of converting into INR. Clear to all of you, students? So one question expect in the examination 1991. The relief of double taxation. The relief of double taxation, wherein the relief is given to a resident person. The resident person has got a foreign income. The resident person has got a foreign income. And if the resident person has got a foreign income in the nature of rent from the house property, then that rent, if it is in foreign currency, then that particular rent will be converted into the INR. And to convert into INR, we need a conversion factor, and the conversion factor would be the TT buying rate as on the last day of the previous year. The TT buying rate as on the last day of the previous year. Is that clear to all of you now? This is one question expect in the examination, how they can use house property chapter in your examination. This is how they can do it. Apart from that, students, the other part, otherwise competition is the same. Competition is the same, students. Don't worry about the competition. Competition is the same. GAV, I'll take you through to the GAV calculation also. Don't worry. GAV, less municipal tax paid. Paid by whom? Paid by the owner or by the tenant. What has to be considered? It is only the paid by the owner what is to be considered for the purpose of reduction. So GAV less municipal tax paid, NAV standard deduction less interest. That is how you will calculate the income from house property. And if it is in foreign currency, please convert into INR by multiplying it by TT buying rate as on the last day of the previous year. Second question, which I expect very strongly to be there in the examination, is that these people can definitely target beautifully. They can place you beautifully in 115 BAC. Ankita, good evening. They can place you, many students who have just joined, again I'm telling you, the charts, those who want to buy, they can buy it from this, the booksellers, 97794300034. The bookseller will, they are the one for the charts, contact above to the booksellers. Students, pay attention to this one now, all of you. 115 BAC, again, students, I'm an individual. Students, I'm an individual. And I have got a house property income. I am an individual and I have got a house property income. Clear, students? Perfect, Ankita. So, Ankita, that in the March month we will conduct. So, I am an individual and I have got the house property income. And because I have got the house property income, students, because I have got the house property income, students, in this context, please tell me, if I opt for 115 BAC, my first question to all of you is this: whether I can take standard deduction or not. If I am opting for 115 BAC, whether I can opt for, all of you will have to answer, whether I can opt for standard deduction or not. If I have, again I'm repeating the question, I'm an individual and I have got a house property income and I want to opt for 115 BAC. Okay, I'm an individual, I've got a house property income and I want to opt for 115 BAC. What is the question which I've asked? Can I claim the standard deduction of 30% of NAV? Can I claim the standard deduction of 30% on NAV? What is your take, students, on this one? Shelly? Yes. What is your take on this one, students? Standard deduction. Did you came to know? The standard deduction. The answer to that is yes. Palak, answer to that is yes, you can. Reason being, where there is a will, there is a way. Isn't it? Nothing is impossible, sir. Yes, you can. Reason is to be careful. That standard deduction you cannot take, that is only in the case of salary head. Which head? Salary. So if I am opting for alternate tax regime of 115 BAC, then in that particular case, the standard deduction which is not available is from the head salary. From the head salary. But so far as the head house property is concerned, if I am opting for 115 BAC, then will I be eligible for a standard deduction of 30% of NAV? I will be. That is point number one. Then in that case, you will say, sir, in that situation, can you then tell us what is the embargo? What is the restriction? If as an individual, I want to opt for 115 BAC. If as an individual, if I want to opt for 115 BAC, then sir, can you tell us what is the embargo? Then in that particular case, students, please hold your horses here. Be careful what I'm saying here. The restriction which is applicable, if I want to go for 115 BAC, as far as the house property head is concerned, is, can you tell me what is the restriction? The restriction is, which is applicable is, can anyone tell me what is the restriction in this case? Quickly, students, what is the restriction in this particular case? You should be in a position to tell me, students. Last 10 seconds, I'm giving it to all of you. And the time one lost is lost forever, students. 10 seconds. No, what is that? What is the restriction which is there in this regard? The restriction, students, last 5 seconds. Last 5 seconds. The restriction is this now. It is there in the chart towards the later side, but I just wanted to refresh your memory. The restriction, students, is that the set off of the loss from the house property head. The set off of the loss cannot be, the loss cannot be set off. The loss of this particular head cannot be set off. So you cannot set off, students, the losses. That you always keep in mind. You cannot, students, set off the losses. Please keep this particular point in mind. I'll just show you, for your particular refreshing your memory, students, this is very important for house property, because house property, don't expect in your examination they will ask you the IPCC level. House property, if at all they have to ask you, how they are going to ask you? They are going to merge it like this. These people, students, are beautifully going to take you for a ride. In the individual taxation examination question, they are going to take you for a real ride. And what is that? See herein. Can you see that individual? If in this context, say for example, he is a salaried employee, alter tax regime, all of you just have a look. Interest. Yeah. One is about loss under the head house property. Can that be adjusted, students? Can that be adjusted against any other particular this thing? And the answer is no. Loss under the head house property cannot be set off against any other income. That is point number 1. And what is point number 2? Interest on loan taken for self-occupied house property subject to the maximum of 2 lakhs. So whatever that SOP unit had, that obviously that SOP unit, we always get 2 lakhs. So that 2 lakhs is out from the game. That 2 lakhs is out from the game. So if I am a particular person, students, you tell me one thing. If I have got an individual, students, please pay attention. If I have got an individual, I have got an LOP1 and I have got LOP2. Students, LOP1 and LOP2. From LOP1, there is minus 3 lakhs. From LOP1, there is minus 3 lakhs. From LOP2, there is 2 lakhs plus. You have to tell me whether from LOP1 minus 3 lakhs, can that be set off against from LOP2 2 lakhs? Is it possible or not possible? If I have taken for 115 BAC, if I have opted for 115 BAC, whether individual who has got both LOP1 and LOP2, LOP1 and LOP2, can this be adjusted or not? Can this loss from one house property, can that be set off against the income from the another house property? This is your examination question, students. Can that be adjusted against this or not? Quickly, last 5 seconds only now left, students. Whatever the best that you can do, you have to do it in the last 5 seconds only. And Vivek, the answer to that is yes, it can be set off. Yes, it can, Bala, be set off. And what they have used the word? Loss under the head house property. But after this, the balance 1 lakh of loss, after this, the balance 1 lakh of loss that you can see, whatever is this balance 1 lakh of loss, what will happen? This will get lapsed. This will get lapsed, students. This exactly what they are trying to say. It cannot be set off from any other heads of income. This will get lapsed. I hope that all of you are clear with this one, students, now. All of you are clear with this one, students. This balance 1 lakh, students, this will get lapsed. It cannot be carried forward. I hope that all of you are clear with this one. Fine, students, in this context. So therefore, in the same head, students, in the same head, you can do this set off, which is house property head. You can do this set off. But after set off, if still there is a balance particular loss which is available, then that balance loss will not be allowed to be set off from any other head. This is one point. Second point, students, SOP. Herein, if it is an SOP property, then what is the GAV? If you have taken a loan from the SOP property, if you have taken a loan from the SOP property, then that maximum 2 lakhs of the set off of the deduction of interest expenditure which is available, maximum of 2 lakhs of the deduction of the interest expenditure which is available will not be given to you at all. Will not be given to you at all. Why? Because you have opted for 115 BAC. So students, this is the only 2 points which you have to be very careful. And whenever you revise house property, please don't revise house property in isolation. Never revise house property in isolation. You have to hit these 2 points which I told you. Because in final CA examination, the ICI is going to target the question only like this. As far as house property is concerned. Either they will target the case law which I have taught you, or they are going to do it this way. Is that clear to all of you? So one is the 90 and 91 angle, TT buying rate. And the second one is, if you are talking about 115 BAC, then in 115 BAC, the restriction on HP is what? The restriction on HP, house property is what? You can just try to take a note of it here itself. You can try to take a note of here in itself. The restriction on HP, 2 properties. Which are 2 properties? SOP and LOP. SOP, no interest deduction. No interest deduction. And LOP, students, primarily loss from LOP unit if not fully adjusted. If not fully adjusted. Fully adjusted from what, students? From other LOP unit. From the income. From the income of the other LOP unit. From the income of other LOP unit then such balance loss, please write, such balance loss shall be lapsed. Such balance loss shall be lapsed. Please write fast, students. If you are through with this last 5 minutes for house property, then we go to PGBP. I'll take 5 minutes break after house property, students. Is that okay with all of you? I'll have to take 5 minutes break. We have to take it with your permission. But after house property. Okay? Have you written this one or not? Restriction, 115 BAC restriction on house property. The restriction on house property is what, students? SOP, no interest deduction. SOP, no interest deduction. LOP, loss from LOP unit if not fully adjusted from the income of other LOP unit, then such balance loss shall be lapsed. Such balance loss shall be lapsed. I hope that this point is well taken. So please keep in mind this angle. Third and more important point, students, in house property, they many times give you a rent. In the question, students, I have seen many times they give you a rent. They give you rent from this house property is this much. Many times you will get this rent. By default, for the head salary and for the head house property, whenever they give you like salary, gross, they will only tell you salary received per month is this much. Per month salary is this much. Same way they will tell you rent from the house property is this much. Please always keep in mind, in all such cases, you will have to by default give the standard deduction. You will have to by default give the standard deduction. Is that clear to all of you? But if they give you house property income net, if in the bracket they give you net, what does it imply? If in the bracket they give you net, then in that particular case, or computed as the case may be, then in that case, please don't give any further deduction, no standard deduction. Okay, same is also for salary aid. Now students, other points are only for this thing, quick points of revision on house property. Students, are you aware of this particular? I think all of you are aware of this one. The other important point which has been there of the house property is this. Now, if you have got more than 2 house property, students, and they are not let out, if you have got more than 2 house property and they are not let out, Then you all know, now we have got up to 2 house property can be considered to be a self-occupied property. Up to 2 house property can be considered as a self-occupied property. And if there is more than 2 house property which is not let out, then other than 2, the remaining house property will be considered as a DLOP property. The remaining property will be considered to be a DLOP property. Is that clear to all of you? Is that clear to all of you students? So this is one thing which I thought to just bring to your notice. Now students, just imagine, we just now at the start of our house property discussion, I told you that if a person is holding the house property as a stock in trade, if a person is holding the house property as a stock in trade, and the stock in trade students, and the stock in trade is given on rent, and the stock in trade students is given on rent, then it is chargeable under the head house property. That is already clear to all of you. But what if it cannot be given on rent and the property is held as a stock in trade? Then I already told you that for a person who is holding the property as a stock in trade, in this particular case, the property will be accessible under the head house property. This property will be accessible under the head house property. Do you all get this one or not? Under the head house property. Just imagine these builders, for them entire property will be DLOP then. Entire house property will be DLOP. If entire house property will be DLOP, how to save them? How to save them? Then in that case, for all these builders, the unsold unit of the house property which is held as stock in trade, the GAV will be considered as nil. The GAV will be considered as nil up to what? 2 years. Up to 2 years from the end of the financial year in which the completion certificate is obtained. Up to 2 years from the end of the financial year in which the completion certificate is obtained, provided the builder has not given that house property on rent. Provided the builder has not given that house property on rent. That exactly what you should be very careful about it. So one thing again I'm repeating for the last time, that so far as house property held as stock in trade is concerned, the chargeability will be under the head house property. We have discussed that and we have concluded that. And in respect of the unsold house property, which is not sold as on 31st of March, and it is also not given on rent, for those particular house property students, what is the answer? The answer is the GAV of those house property will be considered as nil up to 2 years from the end of the financial year in which the completion certificate is obtained for that particular property. Fine students, I hope that all of you are clear with this one. Fine. Now I think this is what it is. Now, students, last point I'll just discuss with all of you very quickly, and that is it. Students, unrealized rent is to be deducted. Students, as you all know, unrealized rent would be deducted from the GAV calculation. I think all of you are aware of that. From the GAV calculation, unrealized rent will be deducted, isn't it? At the same time, I will say recovery of arrears of rent. This is one, I think, MCQ question at the most they will ask you, that if the unrealized rent, if it is recovered, or the arrears of rent, if that is recovered. What is arrears of rent, by the way? And how different arrears of rent is with the unrealized rent? Are both of them are different? Arrears of rent versus unrealized rent? Yes, they are different, students. They are different. Arrears of rent means, students, that in the current year, say 21-22, previous year 21-22, I am revising your rent with retrospective effect. I am increasing your rent with retrospective effect. That is from the last year. That is previous year 2021. So I am increasing your rent from previous year 2021. And how much increase? 5,000 increase. So what happens? That 5,000 for the last year per month will be considered as the arrears in the current year. So the total arrears would be 60,000 rupees. 5,000 into 12. 60,000 of previous year 2021 will be considered as arrears of rent for the previous year 21-22. For the previous year 21-22, and accordingly, students, as far as that arrears is concerned, you will be getting what? The standard deduction. Sorry, that arrears is concerned, you will be getting a standard deduction of 30%. Why 30% standard deduction? Because this 5,000 of the last year, 5,000 per month of the last year, you are receiving for the very first time in the current year. This 5,000 per month in the last year, you are receiving it for the very first time in the current year, and therefore students, and therefore what students? And therefore students, in this context, therefore what we will say students? We shall say in this particular context that the 30% standard deduction will be given against the arrears of rent. I hope that all of you are clear with this one. Any queries? Same is also with the unrealized rent. Same is also with the unrealized rent. Unrealized rent which you have received in the current year, unrealized rent that you have received in the current year also will receive 30% standard deduction. 30% standard deduction. Now friends, last one point I'm discussing and then we will move to PGBP. The problem is that the temptation is always there, na? The temptation is always there. Students, under the head house property, we always say, students, under the head house property, what is that we always say? House property, we always say annual value. Isn't it? Everywhere it is annual value. Everywhere it is annual value, students. Let me ask you this, because these are the MCQ question ICS targeted, students. MCQ question ICS targeted. There were, students, supposingly, I've got one house property. One house property. And one house property, it is like this. SOP for 3 months and LOP for 9 months. And this is at 10,000 rupees per month. Okay. Thereafter, students, please pay attention. This is an important one. Thereafter, you have been given the fair rent. Fair rent, 12 months. Students, 12 months fair rent has been given to you as 12 months fair rent. So 12 months fair rent has been given to you of say 1,44,000. And you can say the municipal value has been given to you of 12 months. Or standard rent, whatever you can say, standard rent has been given to you for 12 months is say 1,50,000. 1,50,000. This is the data given to you. So one house property, it was one house property, SOP for 3 months, LOP for 9 months. When it was LOP for 9 months, the LOP was for 10,000 rupees per month. The let out was for 10,000 rupees per month. Clear, friends? The fair rent was the 1,44,000, and that is 12 months data. And the standard rent is for 12 months, 1,50,000. Question to all of you is this. Be careful what I'm asking the question here. The question to all of you is this, that will I make it proportion to 9 months in this case? Will I be making a proportion to 9 months in this case? Quickly, students, you have to answer this one, because this is ICS targeted MCQ. I've seen MCQ. That's the reason why I'm giving it to you. Otherwise, I would not have given this thing to you. Whether I would be revising it to 9 months. Please tell me this one. What is your take on this? The fair rent, because in the GAV what we do, in the GAV calculation what we do, actual rent is compared with fair rent, whatever it be. Then higher of the two, then the higher of the two, whatever is qualifying amount is compared with the standard rent, and then the lower of the two is what is taken as a GAV, isn't it? Lower of the two is considered GAV. So my question therefore is, are you going to reduce this particular part, fair rent, for 9 months data? Answer is no. You'll say, sir, why? 10 months into 9 is 90,000. Okay, 90,000 plus this, and plus you have got 12 months data, SOP for 3 months, SOP for 3 months. How much is that? Nil. So your 12 months annual value is 90,000. This is what it is. You have to compare this 90,000. It is a 12 months data only, 90,000 plus 0. It is a 12 months data only, 90,000 plus 0. And this is your 90,000 rupees. This 90,000 rupees, students, will be compared with what? I think all of you are aware of this. I think all of you are aware of this one. So this is how it has to be considered over here, students. I hope that all of you are clear with this one. Now it is visible, yes. So 90, this is nil plus 90,000. So the total amount is 90 over here. Nil plus 90,000, the total is 90,000. There is only, you have to write one sentence. There is only one particular portion where you will take the proportionate data. Means 9 months data, like proportionate number of months. You will substitute this proportionately only in one case. Do you know which is that case? When the property is purchased in between the year, or where the property is sold in between the year. In that point of time, the fair rent, the standard rent will be considered proportionately. Please write the sentence. Please write the sentence. The fair rent, standard rent, municipal value. The fair rent, standard rent and municipal value and the municipal value shall be considered proportionately. Shall be considered proportionately in the bracket, right? And not for the entire 12 months. And not for the entire 12 months, bracket complete. And not for entire 12 months, bracket complete, when the property is purchased when the property is either purchased or sold during the previous year. Fine, students. I hope that all of you are clear with this one. This is your house property revision. I hope that this was worth to revise house property in this case. Fine, students. So, students, now it is 6:50. So, we will be back. वसीम, मैंने ये बोला था कि प्रोपोर्शनेटली जो होगा आपको क्या करना होगा, उसको सब्स्टिट्यूट करना, क्योंकि जब आपने बेचा खरीदा उसी साल आप क्या करोगे, प्रोपोर्शनेटली ही फेयर रेंट, स्टैंडर्ड रेंट, म्युनिसिपल वैल्यू को लोगे उसी साल. अदरवाइज आप कभी भी फेयर रेंट को या स्टैंडर्ड रेंट को या म्युनिसिपल वैल्यू को आप 12 महीने के हिसाब से ही करोगे. सिर्फ उसी साल, जिस साल खरीदा या बेचा है, आपने क्या करना है. ऑब्वियसली परचेज के बाद आपके पास पूरे 12 महीने के पीरियड होंगे नहीं, ना ही सेल अगर बीच में कर दिया आपने तो 12 महीने के पीरियड तो होंगे नहीं. उसी समय पे आपने क्या करना है, प्रोपोर्शन लेना है. स्टूडेंट्स, नाउ ब्रेक फॉर 7 minutes. विल रिज्यूम एट 7 PM sharp. Okay, 7 PM. Now again I'm telling you one thing, students, here, that for charts you will contact the bookseller. Chart, students, you will contact the bookseller at 977. I'm writing here. Okay, so contact the bookseller at 977 943 0034. Quickly, students, take a 7 minutes break and we'll resume at 7 PM sharp. We'll do PGBP. PGBP is going to be started, students. Quickly, please take a quick 10 minutes break and come back. Let's start, students. Now, students, we'll start with PGP. After the tax rates, after the house property, we are now going to start with the PGP, students. Good evening, Mamta. It is till 10 o'clock. The timetables are already given. So, students, in this context, tomorrow it is at 7 to 1. Students, tomorrow it is 7 to 1. Okay. Oh, it's only Saturday and Sunday. 44 hours we are going to have it. So, Saturday and Sundays only. Timings are fixed. 5 to 10 and 7 to 1. I hope that this point is clear to all of you. Fine, students. Shall we start with this one now? PGBP, students. Now, this topic in the examination, I can tell you one thing, that they target this particular topic in the form of, like, you will find there are MCQs are there. Students, you have to be very careful about the PGBP area. I'll just all of you will take a note of PGBP examination approach, or may I say ABC. No. Tomorrow timing is morning, yes. Tomorrow timing is 7 a.m. in the morning to 1 p.m. in the afternoon. Okay. Students, PGBP in the examination now, how you have to do it? Yes. PGBP, students, in the examination. PGP only will be continued because PGP is a big one, biggest one. Students, obviously the chart, if you see PGP also, there are 10 charts of this one. In the examination, students, PGBP. Now, last study leave revision. Students, study leave. When you now do PGP, please do it intelligently. Request to all of you to do PGP intelligently now. Because otherwise, if you don't do it intelligently, this is going to kill you a lot of time. So, study leave PGP strategy. The PGP strategy, students, is in this context. One is about, students, herein, be very clear concept on the charging sections. The charging section of PGP, the charging section. Okay, here you cannot fail because here this will be conceptual area. Secondly, point, students, which is there, the presumptive income. Please pay attention here, students. Presumptive income and the 44AA books of accounts, 44AD, you will only be getting MCQs and case studies. This is only for MCQs and case studies now, students. Okay. All the small deductions, students, which is there. Small deductions, this would be in question number 1, which is your total income. So, whatever are the small deduction, students, it is in the total income. Deduction or disallowances, students. You can write deduction or disallowances. Question number 1, total income, and the last. So, you have to revise this thing fast. Please don't get stuck. And the last is big sections. You have to be careful. Big sections. You will say, sir, what are the big sections? 35 AD, 35. Then there is a banking company. Sections on the banking company. Tea, coffee, rubber development. 33 AB. Please be very careful. For these sections, you have to have a conceptual clarity. Concept clarity is required. You cannot brush through this particular sections. 35 AD, 35, banking company, 33 AB. This is completely a concept required. Plus, now students, herein, ICDS. Now students, tomorrow I'll share with the ICDS link. ICDS for actual cost concept on depreciation. Actual cost concept on depreciation. I'm just zooming in, students. In this case, zoom out or zoom in? Zoom out. Okay. Study leave PGBP strategy, students. You say, sir, how do we do ICDS? Those who have not done ICDS, in my lecture number 2 tomorrow morning, I'll just share with you the link of ICDS. Please go through it one time. At least one time, students, you need to go through that ICDS class. This is around 6 to 7 hour class. Are there? पालक अभी दिख रहा है आप लोग को? क्यों नहीं दिख रहा? Clear था? I'm just telling you. Clear. You need to have a clear concept of the charging section of PGAP. Okay, maybe not visible because I am maybe there in between. Students here, small deductions or disallowances, students. Small deductions or disallowances, students. Mamta, I'll dictate it, students. Okay, I got it your point, students. Henceforth, I will not write on the right hand side. Students, just excuse me this time. Henceforth, I am not going to write on the right hand side. Okay? Right hand side में नहीं लिखूंगा, students में. Fine. So, but just I'll dictate it. At least you can copy it on this. Small deductions and disallowances. In question number 1, total income. So, try to save time. इस पे ज़्यादा time waste मत करो आप. इस पे time आपको waste नहीं करना है. ठीक है? The next section which is there, students, is 35 AD, 35 और यहाँ पे लिख दो students 32. One more section. Don't forget. 32. What is 32? Depreciation. 35 AD, 35 banking company, 32 which is 32 which is depreciation. यहाँ पर मैंने लिखा है students. यहाँ पर लिखा मैंने 33 AB. I have written 33 AB, students. 33 AB पता है आप लोगों को क्या है? Are you aware of 33 AB, students? Tea, coffee, rubber development allowance. Tea, coffee, rubber development allowance. Here you require concept clarity. All this section, big deductions, 35 AD, 35, banking company, 32 and 33 AB. Here you require concept clarity. ICDS actual cost concept on depreciation. This is very important. Now ICDS, do one time. One time you have to do it thoroughly. You have to do it thoroughly. How much time you have to give? 6 to 7 hours. 6 to 7 hours. Now, from where, how you will do it? Link will be shared in the description box. Of lecture 2 revision. Fine, I'm just writing it so that every one of you are aware. कल जो revision lecture होगा, tomorrow when I do the revision lecture, I'll share the link. But just excuse me students, आप force मत करना. कल तक अगर नहीं हुआ link तो मैं परसों, क्योंकि Monday is working day, so tomorrow is an off day, so maybe the backend team may not be working, but still I'll try to put it in the second class, tomorrow's class link. Please do it only one time. Okay, in Telegram channel also I'll do it. In Telegram channel also I'll put it. एक बार तो ICDS करना पड़ेगा. You cannot do away with this one. Okay, one time at least 6 to 7 hours लगेंगे students, लेकिन एक बार करना है और समय रहते करना है. So one at least you need to do it. Can I now proceed on this on agenda, students? Can I proceed on this agenda? Perfect. Students, always keep in mind one thing. When you compute PGBP, students, when you compute PGBP, always keep in mind this thing. PGBP क्या है? यही है. Keep in mind this one, students. In this one, students, here you need to find PGBP is what? All of you will pay attention now, students. All the questions now a bit later. If those who are yet to write something, I'll just show you later on, but just now focus on the concept. Students, this head PGBP का format ध्यान रखना, because format in the total income. This is question number 1. Question number 1, total income. Please students respect the format. आप line नहीं बनाओगे चलेगा. ठीक है? That this thing, but you cannot do away with the format. Ideally what students को बोला जाता है कि आप लोग scale से line अगर नहीं बना पा रहे हो तो ठीक है. आप लोग ऐसे भी line draw भी कर लोगे चलेगा. So but please keep the format intact. If you lose out on the format, students, they will deduct your marks. For sure, they will look always the format. Format के marks होते हैं. So you cannot do away with the format. in the question that is there on total income, आपको पहला लाइन पे दिया, on the very first line they will give it to you. Net profit of A Limited is rupees 25 lakhs after the debit and credit of the following. Then there is a list of debit and credit items, and after that they will give you additional information. And after additional information, compute the total income and the tax liability. Tax liability कभी कभी नहीं पूछते, so they will at least will ask you total income. At least they will ask you total income. Now when you start with your question here, so you start with net profit as per the books. And then they will give you some items like interest on securities earned has been credited in the net profit and the amount is rupees 5 lakhs. So what you do, you eliminate those items which is chargeable under other heads. Eliminate those items which are chargeable under other heads. Why you eliminate? You eliminate because you will consider it separately. क्यों eliminate करते हो आप लोग? Why you eliminate? You eliminate because you will consider this separately. That is what you do. Thereafter, once you have eliminated that, the income which is classifiable in the other head, now you get the net profit as per books for business. The net profit as per books for business. Okay. Now, once you get the net profit as per books for business, then what you have to do in PGBP, there is a base amount. Please be careful. Just now we have done house property income. In the house property income, do we have any base amount for computation? क्या हमारे पास कोई base amount है computation का? Do we have any base amount for computation? Answer is no. We don't have any base amount for computation so far as the head PGBP is concerned. So far as the head PGBP is concerned, isn't it? We don't have any base amount. Is that clear to all of you students? What we do as far as house property is concerned, GAV, and that too at the starting value GAV, less municipal tax paid, NAV, standard deduction, interest. But when it comes to PGBP, suddenly what happens? Suddenly here you have got a base amount, and that base amount is known as what? Net profit as per the books for the business. And on that base amount, students, on that base amount, what you do? You do add less. What is it? Add less? Add less are all the PGBP adjustment. And thereafter any adjustment relating to the ICDS. And once you have got this, thereafter check in the additional information. ये जो होगा ना आपको, this 2 points, students, you will get in the examination question. Where you are going to get it? In additional information. In the additional information, they will tell you about the brought forward business loss and the UAD. The brought forward business loss and the UAD, that is where you are going to get this information. So you will set off the brought forward business loss and the UAD under 32.2, and this is finally will give you the PGBP. Now once you get the PGBP, students, what is that next point? The next step is the other heads which you have eliminated here. The other heads that you have eliminated here, that other heads you will take it down, calculate that other heads. Please get to GTI. After GTI, check if there is any information relating to chapter 6A. Do chapter 6A total income. This is what you need to do. Chapter 6A total income. I hope that every one of you respect the format. Now, while you look into this one, students, income chargeable under the other heads. So one thing we should be very careful about this format, students. This is the format, because many of you will also appreciate that the bulk of your calculation, students, is coming from the PGBP only in the total income. 1-2 items they will give you capital gains. 1-2 items they will give you of the other sources. But the bulk calculation is only PGBP. Be it depreciation calculation, be it small adjustments, be it brought forward losses, etc. Bulk calculation, students, is always PGBP. So therefore, you should always be very careful about these items. Now students, PGBP section 28 to 43D, quickly students, section 28 to 43D is the, section 28 to 44DA is the range of the section which is there under that PGBP, which you need to target. 28 to 44DA. Now when you target this 20 to 44DA, here students, first section 28.1 is a general charge. What is general charge? It tells you the condition on the basis of which the profit and gains will be chargeable under the PGBP. And what is the condition? Condition is that the assessee should be carrying on the business and profession. Be careful, students. The focus here is on carrying of the business and profession. The focus here is on what, students? On the carrying on of the business and profession. So the profit and gains will be chargeable. The profit and gains will be chargeable if the business and profession is carried on by the assessee. Carried on by the assessee at any time during the previous year. At any time during the previous year. Now, students, I'll just explain you 5 minutes. It's such an important explanation which I'm going to give it to all of you. Only 5 minutes, students. Very important explanation, students, I'm going to give it to you. This last line during the previous year and the first line, profit and gains. The last two words and the first two words. What are the first two words? Profit and gains. And what is the last line? Last two words. Last two words is during the previous year. Now, what exactly it is? So, can I write profit and gains 28.1? The crux I'm now telling to all of you. The profit and gains of the previous year. Now, whenever there is a profit and gains of the previous year, what it implies? That previous year means current year. What is the previous year? What is your previous year? 21-22. So, therefore, I need to calculate the profit and gains of 21-22. It will imply this that the current year sales, current year revenue, that is the sales of 21-22, revenue of 21-22 will be adjusted against. Will be adjusted against what? Against the expenditure, losses, allowances of previous year 21-22. Only then I can say I have got the profit and gains of previous year 21-22. Isn't it? Profit and gains of previous year 21-22. But we have seen what, students? That there are prior period items through some specific provision. There are some specific provision which is allowing the deduction of the prior period items. Which are those sections? Like 43B. 43B, one section 43B, small deductions. What is that 43B? It tells you that certain payments would be allowed in the previous year in which the amount is paid. In the previous year in which the amount is paid. So it implies what? Supposingly last year, previous year 2021, some of the GST has been paid in previous year 21-22 in say December 2021. December 2021, the GST has been paid for previous year 2021. So in that particular case, will I be getting the deduction of the GST in the previous year 21-22? Yes, even if it is a prior period item. So please be very careful. Many sections like 43B, 40A, you remember 40A? Disallowances of TDS expenditure. Disallowances of TDS expenditure. Now, if the TDS is not deducted or after deducted not deposited, then the expenditure gets disallowed either fully or proportionately depending upon who is the payee. Now, what if in the subsequent year I do the TDS compliance? Will I be allowed the deduction of that portion of the expenditure which got disallowed? Will I be getting the deduction of that portion of the expenditure which got disallowed? And the answer is yes. Now, can you tell me in that case? So, in that subsequent year, that expenditure is a prior period item. That subsequent year, the expenditure is prior period item. Will I be getting a deduction? Yes. Why am I getting a deduction? Because there is a specific section which allows you the deduction of such prior period item. And which are the specific provision? 40A, 43B. All these are the specific provisions. And that exactly is the point. So my point to all of you students is this. Please pay attention, students. My point to all of you is this, that the general charging section 28.1 tells you that the profit and gains for the previous year, the profit and gains for the previous year is what needs to be chargeable. This profit and gains is adjusted further with the other provisions. This profit and gains is adjusted. This profit and gains is adjusted further with the other provisions. And if the other provisions tell you specifically that we want to give the deduction of the prior period item whether in that case the deduction of the prior period item as per the specific provision, will that be allowed? Answer is yes, it will be allowed. Answer is, students, yes, it will be allowed. I hope that this point is understood by all of you. So profit and gains for the previous year, this is how it has to be interpreted. Coming on the further particular part, coming in this particular context, students, 28.2. And what is 28.2? Compensation. Students, this 28.2 is about the compensation or the other payment due. Now this is important. Here, students, is about the compensation is like a capital receipts. They are generally like a capital receipt. Now one thumb rule, students, I must say before we proceed further. Under the income tax law, please pay attention here, specific point. Under the income tax law, only the specific capital receipt, not all the capital receipt, only the specific capital receipt which has been defined as an income, only those are chargeable to tax under the Act. Again, I am repeating, only the specific capital receipt which are defined as an income, only those are chargeable to tax under the Act. Many students are asking, sir, where we will get those specified capital receipt, bulk of which is given to you in PGBP. This is where you are getting it, PGBP. Some of which are given to you under the IFOs like lottery winnings, gift. Okay, lottery winnings, gift. There also you will get the specified capital receipts. And some here and there it will keep on coming up, which I will let you know from time to time. But at least be aware that not all the capital receipt it is taxable, because capital receipt by its very nature, students, it is not an income. Capital receipt by its very nature, it's not an income. So what did I told you? Only the specified capital receipt which is defined as an income is what is going to be chargeable to tax under the Act. Bulk of the capital receipt are there under that PGBP. Some of them are also there in IFOS. Lottery winnings, gift are classic example, and some of them will keep on coming up at places which I'll let you know. So this compensation which is given is for termination or modification of your agency business. So if agency business is terminated, that although may be a capital receipt, but will it be chargeable under that PGBP? Yes. Apart from that, students, I will be doing selectively, students, this one, because some of them I'm going to do it at appropriate places. I'm not going to do it now. Students, this 28.5. 28.5 also, I think all of you are aware, interest and remuneration. Interest and remuneration received by the partner from the partnership firm will be chargeable in their hands under the head PGBP. But what is chargeable in the hands of the partner is what is allowed as deduction to the partnership firm. So what is allowed as deduction to the partnership firm? That much portion of interest and remuneration received by the partner will be chargeable in their hands. Okay, this we'll discuss a bit later also. So this is important now. This is very comprehensive. Students, just compare this with this herein. Now, this is 28.2 was limited only for compensation for termination or modification in terms of the managing agency. 28.2e is so comprehensive. It is so comprehensive, students. It is taxing what? Compensation which is arising on the cancellation of any business contract. Any business contract. So earlier, restrictive. Now, any business contract, if it is cancelled or modified, for which you are given what? You are given the compensation, then that compensation, though it is a capital receipt, that compensation, though it is a capital receipt, would be chargeable under the head PGBP. Would be chargeable under the head PGBP. Apart from that, students, let's look upon to the other particular point. Apart from that, students, this 28.3 mutual concern. 28.3 mutual concern, I'll teach you there, students. Now, this is very important, students. This is very important. This part. ICDS is there. I'm going to do ICDS quick, that relevant point. 28.3 very important point, students. What is this point, students? Over here. They are saying profit on sale of import entitlement license, duty entitlement passbook, and the drawback. So, these are the export incentives. Now, export incentives, they have said it will be chargeable under the PGBP. export incentive will be chargeable under the PGBP. Now, my only point to all of you is this. Which would be the year in which it will be chargeable under the PGBP? Again, I'm repeating. Which will be the year in which it will be chargeable under the PGBP? So that is the answer that we will get it from ICDS. ICDS read with section 145B. Two options are there. The year of chargeability of the export incentives are, point number 1, the year in which there is a reasonable certainty. Please pay attention to what I'm saying. Mark my words. The previous year in which there is a reasonable certainty that the export incentive will be realized, although it may be realized in the subsequent year. But now it is there is a certainty reasonably that the export incentives today or tomorrow will be realized. So the chargeability will be in this year, or the chargeability will be postponed in the previous year in which the export incentives are actually realized. The export incentives are actually realized. Which will be the previous year in which the chargeability would be attracted? Again, I'm giving it to you two options. Option number 1, the year in which there is a reasonable certainty that the that the export incentives will be realized, although it may actually be realized in subsequent year, or the previous year in which the export incentives are actually realized. So a Supreme Court judgment was there earlier which said that the year in which it will be chargeable will be the year in which the export incentives are actually realized. That was the judgment. To supersede that judgment, section 145B read with ICDS number 4 on revenue recognition says that the previous year of chargeability of the export incentive would be the year in which year, students? The year in which there is a reasonable certainty that the export incentives will be realized. So that is what it is, students. 28.4 is a simple one. This 28.4 is about the non-monetary benefit. 28.4 is the chargeability in respect of the non-monetary benefit which is arising out of the business or profession. So that is what it is, students. 28.7, students, I'll do it with 35AD. 28.7 I'll do with 35AD. Now this 28.5A, if you see, this is for non-compete agreement. This is for the non-compete agreement, 28.5A. So if I am getting an amount on account of any non-compete agreement, whether it is for business or it is for profession, but it is in respect of any non-compete agreement, then in that particular case, students, we will say that whether it will be chargeable, and the answer is yes. So for the business or profession, if you are receiving any non-compete agreement amount, then the same will be chargeable. The next point, students, is about the Keyman Insurance policy. Students, Keyman Insurance policy amount which you receive, it can be chargeable under the salary. It can be chargeable under the salary. It can be chargeable under the PGBP, and it can also be chargeable under the head IFOS, depending upon who is the beneficiary. So if the beneficiary of the Keyman Insurance policy is the employee, then the amount which is received will be chargeable under the head PGBP, under the salary. If the beneficiary of that particular amount happens to be the employer, then the amount will be chargeable under the head PGBP. And last, if the beneficiary is any third party, then the chargeability, students, will be under the head IFOs. I hope that all of you are clear with this one. So this is how the things has to be considered, students. Now with that last chargeability, we go to the next section, which would be on the depreciation part. Students, please have a look to this one. 28.6a. Students, this section I'll just tell you, and all of you are aware of it. In the head capital gain, students, there is a conversion. For conversion, students, there are two particular chargeability. One conversion, students, is in respect of the head CG, and this is about the conversion of the capital asset into stock in trade. And another conversion is under the head PGBP, and that conversion is about the stock in trade getting converted into capital asset. See the difference. The stock in trade getting converted into a capital asset. the stock in trade getting converted into a capital asset. So see this particular point. Conversion of this versus conversion of this one. Capital asset into stock in trade, and the second one is the conversion of a stock in trade into a capital asset. Can you see that difference, students? Now here, please always be very careful. The full value of consideration, as you know, it is a fair market value. Fair market value. Fair market value on transfer, on conversion, may I say, because conversion of a capital asset into a stock in trade is a transfer. The previous year of chargeability is the previous year. What is the previous year? The previous year is the year in which the stock in trade is sold. Year in which the stock in trade is sold. All of you agree to this one? Stock in trade is sold. Every one of you are aware of this one. So this is not a big deal. Students, here also if you see, if you see students. So in the case of PGBP, stock in trade converted into a capital asset, the full value of consideration, students, is a selling price you have received. The selling price, students, that you have received. The full value of consideration, students, is a selling price, students, that you have received. Will it be a selling price received? Generally, the answer is yes, but here it is not a selling price which is received. Here it would be, students, here it would be what? The fair market value. Fair market value on the conversion. Why? Because you are not selling it, you are converting it. Conversion of stock in trade into a capital asset. Now, which is the previous year of conversion? This is a real comparison. The previous year of the conversion, students, would be the year of conversion itself. Year of conversion. Please don't make a mistake or a blunder to say that no, when the capital asset is sold. No! In the year in which the stock in trade is converted, that will be the year in which that is the year in which the PGBP, students, will be charged under this particular head. The income will be charged under this particular head, the year of conversion itself. And you will take the value, fair market value on the conversion. Now, students, here one very important MCQ question that ICI has asked. One MCQ was there. The stock in trade was of motor vehicle and that motor vehicle was taken by the SSC for its self-use. That motor vehicle was taken by the SSC for his self-use. So if that particular students, the stock in trade is converted into a capital asset, and if that motor vehicle has been converted for his self-use, please be very careful. No chargeability will be attracted. For what is the reason? Reason is this, that motor vehicle is a movable personal effect, and because it is a movable personal effect and not falling in that exclusive list of movable personal effect which are considered as a capital asset. You know, students, there are exclusive lists where movable personal effect are considered as what? As your capital asset. Those high value items, jewelries, etc., etc. So except for those, all the remaining movable personal effect are not a capital asset, and therefore because it is not a capital asset, the chargeability will not be attracted. Please keep this point in mind. These people keep asking you these kind of questions just to make a silly mistake out of it. Now, students, after this, now comes the big one, the depreciation part. Students, the big one is the depreciation allowance. Students, in the case of depreciation, students, always keep in mind, herein, students, here there are two types of the block which are being there, and I think all of you are aware. The two types of assets are, there are two types of basis of depreciation allowance. One is the SLM and another is the block scheme. Which are the two types? One is the SLM, another is a block scheme. Now, students, as far as SLM is concerned, students, it is optional scheme. Okay, optional scheme is there. But there can be an MCQ question, students, to all of you, which can say to you that, what if tomorrow the SSC who has opted for the SLM scheme of the depreciation, and which is that SSC who can opt for the SLM scheme of depreciation? The SSC which is engaged in the business of power generation or power generation and distribution unit. So what if the SSC who is in the business of power generation or power generation and distribution unit, if after claiming the depreciation for some year, Thereafter, they are selling that particular asset, which is generally the plant. So after some year, if they are selling that asset, then in that case, students, what will happen? In that case, this is what the situation would be. The selling price would be lower than the WDV. There are three situations. The selling price is low, effectively two situation. One is the selling price which they have got is lower than the WDV. And the second one is the selling price is higher than the WDV. Now, if the selling price is lower than the WDV, we all know it should go under the head capital gains. We all know, students, it should go under the head capital gains. However, here we have got a specific provision which says that the deficit will be allowed as a deduction under the head PGBP in the name of, students, in the name of terminal depreciation. In the name of terminal depreciation. Students, just a second. In the name of terminal depreciation. Just a second. So herein, students, as I told you, if there is a deficit amount, then that deficit would be allowed as deduction in the form of terminal depreciation. And that terminal depreciation, students, you will be getting it under section 32(1)(3). That terminal depreciation, students, you will be getting it under which section? Under section 32(1)(3). And where you say that the selling price is higher than the WDV, the selling price is higher than the WDV, then the surplus, students, then the surplus which is there, obviously even the surplus should go under their capital gains because it's a sale of capital asset. But they say that no, the surplus to the extent of the depreciation that was allowed to you earlier. Please repeat with me. The surplus to the extent of the depreciation that was allowed to you earlier under section 32(1)(1), that much portion of the surplus will be charged under the head PGBP in the name of balancing charge. And the surplus which is over and above, surplus which is the excess amount of surplus will only be charged under their capital gains. So please don't make the mistake of charging the entire amount of the surplus under the head PGBP. No, only a portion of the surplus which is to the extent of the depreciation earlier allowed under section 32(1)(1), that much portion of the surplus only will be allowed as balancing charge under 41(2), as balancing charge under 41(2), and the remaining portion, students, and the remaining portion only will go under the capital gains. Are you all clear with this one? Then I can move forward, students. If you all are clear, only then I'll move forward. Chart book, Chirag, I've told you. ठीक है, मैं कर रहा हूँ, zoom कर रहा हूँ. Chart book, Chirag, student, those who are asking for chart book, I'm not paying attention here. Chart book 977. I will give you the number of book shop 977 94 30034. Please contact there to get the chart book. Students, all of you are clear? Then can I go to 32(1)(2)? यही सबसे important है. The block scheme. If all of you are clear, any questions? Because I'm not going to come to this particular part again. If all of you are clear, then I'm going to come. Oh, this is over once and for all. No further discussion on this SLM scheme because any case it's an optional. At the most, students, Mamta, at the most they will ask you only this as your MCQ, question. Fine. Coming to the block scheme, this is a game. This is the only big one, students. The block scheme of depreciation. Now, in the block scheme of depreciation, students, always keep in mind, please always, if possible, respect the format of the block. The format of the block, students, we all are aware. It is covered, given to you under section. Which section gives you the format? The block format, students, is given to you under section 43(6), clause number C. This is where the block format is given. I think many of you are aware of this format also, but still I'll tell you. Just students, it's worth always to revise this and don't make the mistake because ultimately it's the format that is going to teach you through everything. For particulars and amount. So there is 1st of April, there is an opening WDV. opening WDV, and also there would be a number of assets in the block. Students, when you prepare a block, always keep in mind, Chirag, I have PGBP revision. No, I am doing the revision of the entire chart. And that revision is Saturday and Sunday, 44 hours. Saturday and Sunday, 5 to 10 on Saturday, Sunday, 7 to 1. So, Saturday and Sundays. And that would be for 44 hours. Fine. So, students, here, opening WDV. So, when you prepare a block, students, please remember there are only 4 blocks. Which are 4 blocks? 3 blocks are intangible and 1 block in intangible. Intangible, students, when very important amendment is there. Which amendment? That amendment is in the case of the goodwill, which I am going to discuss with you separately on that. So, tangible and intangible. Now, in the case of tangible, there are 3 subcategories. Which are 3 subcategories? One is furniture, another is plant, and last is building. Furniture, plant, and building. Now, always keep in mind one thing. In the case of plant, there are subcategories. What do you mean by subcategories? Meaning thereby there are many other assets in the case of plant. Many assets are there in the case of plant, for which there are different rate of depreciation which has been prescribed. Okay, so if there are different subcategories for which there are different rate of depreciation which is prescribed, please ensure, all of you students, please ensure, make them as part of one block. I'll give you a classic example, students, and the classic example is motor vehicle is at 15%. This motor vehicle, when you compare it with what? With your normal plant and machinery. Even that normal plant and machinery is at 15%. So, this motor vehicle of 15% gets clubbed with this particular 15%, and they constitute as one block. So, please ensure that the block is prepared correctly. All of you will ensure that the block is prepared correctly. So, in the number of asset, and therefore, in this, if it is plant 15%, if I give you a case study, it is a plant 15% block. So, in that plant 15% block, here motor vehicle will also come in the opening WDV. And along with the motor vehicle, there would be other plant also at 15%. So, all of them would be there over here, students. All of them would be there over here, and whatever be the opening WDV. Then what will happen? During the previous year, there would be additions. Now, during the previous year, there would be additions, students. Now, the additions always would be as per the actual cost. Now, this is what I was talking about to all of you. Actual cost, ICDS. I told you to refer ICDS. So, additions would be on the basis of the actual cost. Now, actual cost, I will say to all of you, here section 43 plus ICDS. Actual cost would be section 43 plus ICDS, and thereafter, same during the previous year, there can be some sale during the previous year. Please write this as money payable. You have to write this as money payable, students. When I say money payable, you'll say, sir, what does it mean? I have to sell the asset and pay the money also? No. This money payable is from the perspective of the buyer. How much money that he will pay to you for this plant that you have given to him. That is what you mean by the term money payable. So, the word is money payable. Now, money payable for the asset which has been sold, discarded, demolished, scrapped, etc. So, this is the money payable that you are going to reduce. And the 31st March, as you know, 31st of March of the previous year, you will have primarily the depreciation which is allowed to the SSC. This is 31st March for all of you students. Depreciation allowed to the SSC. Now, quickly students, this is the format that you should always keep in mind, and then 1st April this thing is there. Students, please be very careful. that one point which I'm just trying to tell to all of you right now. Please be very careful. That is depreciation on 31st of March of the previous year that you're going to claim. This depreciation would be claimed only if the money payable which is there is, the money payable is less than what? Less than the open WDV and the additions made during the previous year. If the money payable is less than the open WDV and the additions made during the previous year, only then we will have the balanced WDV. Only then we will have the balanced WDV, and only on the balanced WDV that the depreciation allowance can be given. Point number two, students. Point number two, what if entire block is sold during the previous year? What if the entire block is sold during the previous year? Then what is that conclusion? If the entire block is sold, then the block ceased to exist as on 31st of March. And if the block ceased to exist as on 31st of March, then no depreciation can be taken. Please be very careful. The block should be in existence as on 31st of March. And it should have a positive WDV. And it should have a positive WDV. Only then you can claim the depreciation allowance. If the block is not in existence, or even if it is in existence, it does not have positive WDV, then in that case, you will not be eligible for depreciation allowance. I hope that all of you are clear with this one. Now, in this context, students, may I draw your attention to one very popular adjustment which ICI gives. What does it gives is that they will give you that the net profit of A Limited is 25 lakhs after the debit and credit of the following. Net profit of A Limited is 25 lakhs after debit and credit of the following. And one of the debit students would be that there was a plant which was lost by fire. But no insurance compensation money has been received. In that particular case, students, what will be our treatment? So the answer to that is, be careful. The treatment in that particular case will be, are you aware of the treatment, students? Anyone? First of all, debiting the plant being lost by fire in your profit and loss account, debiting the plant which is lost by fire in the profit and loss account, can I say it is a capital loss? And because it is a capital loss, you will not be getting any depreciation allowance. That is point number one. Point number two, please pay attention to the second point. The second point over here is this, that did you receive any money in respect of that asset? Please pay attention. All of you now, be very careful what I'm saying. Did you receive any money in respect of that asset? Answer is no. You have received no money in respect of that particular asset. So the next question therefore is, if you haven't received any money, the money I was expecting here was in the form of insurance compensation. The money which I was expecting here was in the form of insurance compensation. So, did you receive any insurance compensation? No. So, therefore, if you have not received any money, does the asset continues to form part of the block? To that, the answer is yes. It continues to form part of the block. Why? Because this format of block is not my format. This is a format of 43(6) clause number C. And what the format says? That the asset will be removed from the block only if the asset has been sold, discarded, demolished or scrapped, in respect of which the money has been received. So if you have not received any money in respect of the asset which has been scrapped or destroyed, then can I say, as per the format, the asset continues to remain in the block? The asset continues to form part of the closing WDV as on 31st of March? Answer is yes. So therefore, will the SSC be eligible to claim the depreciation allowance in respect of the WDV of that particular plant which is there as on 31st of March? Which plant? The plant which has been destroyed, demolished, for which no insurance compensation has been received? Answer is yes. Many students are still thinking, sir, but what about the use test? What about the use test? The asset is no longer in use. So please pay attention. Last time, please pay attention. The single asset use test, the single asset use test is relevant only in respect of the single asset use test is relevant only in respect of a newly acquired asset. Only in respect of a newly acquired asset. What does it mean? It means that in the case of a newly acquired asset, in the case of a newly acquired asset, it will be eligible for depreciation allowance only if a newly acquired asset, repeat with me, will be eligible for the depreciation allowance only if it forms part of the block. Only if it forms part of the block, and it will form part of the block only if it is put to use. So this additions which I have written on actual cost, when you will add it? When will you add it? When it is put to use. Be careful. When you will add it? When it is put to use. So this additions which you are taking, which is on the actual cost, you will be taking only when it is actually put to use. Once the asset is put to use, then subsequently you will see not the single asset use test. What you will see? Whether the block as a whole, if that is in use. Why? Because under the block concept, we are claiming the depreciation on what? On the WDV value of the block. Since we are claiming the depreciation on the WDV value of the block, what is to be seen? Whether the block as a whole, if that is in use. And if the block as a whole, if that is in use, even if some of the asset may no longer be in use for whatever be the reason, even if some of the asset is no longer in use for whatever be the reason, whether the depreciation allowance in respect of that asset, will this be eligible? Answer is yes. Why? Because that asset continues to form part of the block. And why it continues to form part of the block? Because no money has been received in respect of that particular asset. And since no money has been received in respect of that particular asset, the asset continues to remain part of the block, and it continues to form part of the WDV value of the block. I hope that all of you are clear with this one now. So this is one of the very popular question which has been there, students, about this one. So if this case, students, money payable, so I can just give you one note quickly and you will write it down. Unless the money is received by the SSC, the asset, unless the money is received by the SSC, the asset continues to form part of the block. The asset continues to form part of the block. The asset continues to form part of the block. And the WDV of such block. And the WDV value of such block. And the WDV value of such block. And hence entitled for the depreciation allowance. And hence entitled for the depreciation allowance. Fine, students. Now, students, this attempt, May 22, be very careful about, because see, depreciation is a concept which has got many layers. Many layers. One is the rate of depreciation. Another is what I have spoken about it just now, the concept. Even on this, the question has been asked. Another is the condition. What are the condition? for the claim of the depreciation allowance, the condition is that there has to be the ownership on the asset apart from the use. You should also own the asset. Use, I have already told you. What is the use test? What is the relevance of use test? The relevance of use test is, again I am repeating for the last time, that in the case of a single asset or an individual asset, the depreciation can be claimed in respect of that asset only when it forms part of the block, and it will form part of the block only when it is put to use. Once the asset forms part of the block, what has to be seen subsequently is that it is the block as a whole that should be in use. It is the block as a whole that should be in use as on 31st of March. And if the block as a whole is in use as on 31st of March, but few of the asset in the block is no longer in use, then in that particular case, whether the depreciation allowance will that be available? To that the answer is yes. The depreciation allowance will be available. So this is the concept of use test. Come to the ownership. This attempt, ownership is very important. Students, directly ownership, in this case, first I'll tell you the test of Mysore Minerals Limited, and thereafter what is expected in your examination, I'll tell you that. Ownership, students, the question came up was that if the property is not registered, if the asset is not registered in your name, in that case, will you still be eligible to claim the depreciation in respect of that asset? If the asset is not registered, students, in your name, will you still be eligible to claim the depreciation in respect of that asset? To that the answer is yes, you can. You'll say, sir, how is it possible? I'm telling you and I'm proving for all of you now. Please pay attention. Students, ownership, what they say is this, that the asset to be owned by the assessee, here what we are talking about is the beneficial owner as held by the Supreme Court in Mysore Minerals Limited. 3 times ICA has targeted this case law, Mysore Minerals. Now, what is to be seen, students? What is to be seen here is that, am I holding that asset? Please pay attention, students. Am I holding this asset? Am I entitled to hold the asset on my own account, excluding all the other person? Am I entitled to hold the asset on my own account, which will give me the exclusive right over that asset? So if I am entitled to hold that asset on my own account and I am having the exclusive right to use that asset, then in that case, I am the real owner. I have got the exclusive right to use the asset, then I am the real owner. Even if the asset may not be registered in my name. This is the concept of ownership. So therefore, this is what, students, will be considered over here. Now, in this context, students, the lease transaction is the main critical part which is expected in your examination. Lease, students, you always keep in mind, under the income tax law, there is a whether it is a finance lease or whether it is an operating lease, it is only the lessor who will be eligible to claim the depreciation. Who will be eligible to claim the depreciation? Only the lessor. Please keep this in mind, because what the lessor can do, even if it is a finance lease, see, we know in finance lease that the lessee has the option to acquire the property somewhere towards the end of the lease period. But unless and until the lessee acquires that particular asset somewhere towards the end of the lease period, can I say that the lessor has the right or the control over the asset? And can he call back that asset? Till the time the lessee exercises the right to purchase the asset, we can say it is a lessor who exercises the control over the asset. And how he exercises the control over the asset? The lessor can, what he can do is that he can cancel the lease agreement, pay the compensation to the lessee and take back the asset. So who has the ultimate control over the asset? It is a lessor and not the lessee. And therefore, if a lessor in the course of his leasing business. If the lessor in the course of the leasing business has given some of its assets on lease, then in that case lessor will be eligible to claim the depreciation. In that case the lessor will be eligible to claim the depreciation. Is that clear to all of you? Now there is one exception, students, where the lessee is entitled to claim the depreciation. And which is that exception where the lessee is eligible to claim the depreciation? This is the exception, students. The exception is that if, students, please pay attention here, if on the leasehold premises, say a leasehold land, if on a leasehold land the lessee has incurred the expenditure, the lessee has incurred the expenditure on the construction of the building, the lessee has incurred the expenditure on the construction of the building, then in that particular case we will say that the lessee is the one who will be eligible to claim the depreciation as per the explanation given to you under section 32(1). So what is the criteria? The criteria is this: it should be a leasehold land or leasehold premises. Condition 2, the lessee should have incurred, please you mark my word, incurred the expenditure on the construction of the building on that particular premises. In such case, it is a lessee who will be considered as a deemed owner. It is a lessee who will be considered as a deemed owner. Now please tell me one thing. Please tell me one thing then. If in respect of this building which I have incurred in its construction expenditure, which I have incurred on its construction expenditure, what did I told you? The ownership will be with whom? With the lessee. The ownership of that particular construction expenditure or that building which has been constructed on that leasehold premises will be with the lessee. Say after, students, 5 years, say after 5 years, the lessor gives me the compensation to make an exit from that particular building premises. So if he is giving me the compensation to make an exit to get out from that particular premises, what is the treatment of this compensation? What is the treatment of this compensation given to me by my lessor? What is the treatment of the compensation in this case? So the treatment of the compensation, students, in this case is that this compensation amount will be reduced as a money payable from the block. Which block? The block is building. This compensation amount will be reduced as money payable from which block, students? The block is building. This is exactly how it has to be considered. The block will be building and it will have to be reduced. I hope that all of you are clear with this one now. All of you, students, and that exactly is the point. So students, this is what they are trying to say. Let's read this one out. Explanation 1 to 32(1)(1). Where the business and profession of the assessee is carried on in a building not owned by him, but in respect of which the assessee holds a lease, or means that is a lease property, and any capital expenditure is incurred by the assessee on the construction of any structure, then the provision of this clause shall apply as if the said structure is a building owned by the assessee. So students, we are done with this particular part. Now, this particular part, students, I will strongly recommend the concept of actual cost, students. Please, students, I am requesting to all of you, in my second class, I will give you the link of ICDS. I will give you the link of ICDS in the description box of the second class of this revision lectures, in the descriptive box. You will have to do in this case, description box. Please, you need to deal with this one, students, because otherwise ICDS is so important, because it captures, I have discussed everything in that 6 to 7 hours. There are 10 ICDS. You have to do once ICDS carefully, students. I have taken 6 to 10 hours time to do all the ICDS. I have done it thoroughly. Please go through the same. That is only one request. Students, apart from that, there are explanation to section 43(1). Maximum explanation, students, of this 43(1) gives you the case for a cost to the previous owner. Maximum explanation here gives you the case for cost to the previous owner. So there is like a case for a cost to the previous owner, as we all know, like amalgamation, demerger, succession, thereafter conversion of a private company into LLP. In all these cases, the cost of the successor will be the cost of the predecessor, or the WDV of the predecessor, and that exactly how the block has to be prepared. The cost of the successor will be the WDV of the predecessor, and that exactly how the block has to be prepared. Apart from that, students, what else that we have got? We have got this, like scientific research. If I have acquired the asset for scientific research, then in that case, as you all know, students, actual cost minus the deduction allowed 35. So whatever deduction allowed, you say sir, full deduction is allowed, nil. Then your actual cost is nil. Asset, now apart from this, students, herein, ICI in the examination question, one of the question, total income question, they have targeted, I think, explanation 3, explanation 4 and 4a. Only these 3 explanations, students, I am doing it over here. Rest all the explanation has been taken care of. In the ICDS class or otherwise, I have taken care of all the explanation. Only 3, 4 and 4a I am discussing with all of you over here. Explanation number 3. So other explanation, as I told you, in ICDS class as well as other areas which we'll discuss it also a bit later, I have captured every explanations. So asset acquired at a higher price. Be careful, students. Asset is acquired at a higher price. Explanation 3 I am talking about it. To claim depreciation on enhanced cost and reduce the tax liability used earlier by transferor for his business profession. What does it imply? Asset is acquired at a higher price to claim depreciation on the enhanced cost and reduce the tax liability used earlier by transfer for this. So it was my asset only. I have sold it to you, and you already have a case of a say loss, whatever it be, and I have purchased that asset from you some thereafter. After some year, I have purchased that asset from you at a very higher price. So obviously, students, I am purchasing the asset which I used to use it earlier for my business and profession. Isn't it? Now the entire intention is to reduce the tax liability. What will be the actual cost? Actual cost to be determined by the assessing officer with the prior approval of the JCIT. So they may give it to you that this is what is the AO has arrived at the actual cost. So you will take the AO's actual cost, and whatever is the excess depreciation that has been claimed, please disallow it. Come to explanation number 4. Again an interesting one. Asset once belonged to the SSC, which was used by now this is about, in this case, asset once belonged to the SSC, which was used by him for business and profession, and which is transferred and reacquired by him. So students, you will say, sir, 3 and 4 remain the same. Yes, 3 and 4 remain the same. In the examination, students, just think like this. In the case of 3, there is an enhanced cost. All these things are given to you. Reduced tax liability, these are being used primarily. And maybe this was used earlier. So it may be in explanation number 3, there is one option. I have actually done a reverse. Sorry, I have done a reverse, students. I was using it like I am a lessee, and I was using that particular asset. Sorry, I just have mixed up 3 and 4. I'll again come back. So explanation 3, students, I'll just reframe explanation number 3 for all of you. I was using it. I have taken that asset, say, on lease. Okay, then once I have taken for asset from lease, and then I am acquiring that asset from you at a higher price. Only intention is what? So that higher price can enter into my block, and ultimately I could be in a position to claim a depreciation. So obviously, students, that asset I has taken on lease. I was not the owner. I was not claiming depreciation also. Okay, depreciation was claimed by whom? By the lessor. Now what is the arrangement? Arrangement is like this, that I was paying him lower amount of lease rentals. See, this is what the adjustment was. I was paying to my lessor a lower amount of lease rental, telling him that at the end, when I will acquire the asset from you, I will acquire it at a 10 times of the price prevailing at that point of time. I will acquire it at 10 times of the price which is prevailing at that time. So allow me to pay a lower lease rental, and when I will acquire it, I'll acquire it at a very high price. So intention is very clear. By acquiring it at a very abnormally higher price, your intention, students, is to, I think all of you are clear with this one. Students, your intention is to do what? To claim a higher rate of depreciation. And that is why the assessing officer will come into play. So this is explanation number 3. And what is explanation number 4, students? Explanation number 4 is the asset I was owning, I was claiming the depreciation earlier, I sold to you that asset, and thereafter I reacquired. So that is a word. How do you distinguish? I have reacquired. So this is a case of a sale and buyback. So student, this is a case of a sale and buyback. So this is a case of a sale and buyback. So this was asked in the examination. Explanation number 4 was asked in the examination as an adjustment. So if it is a sale and buyback case, then the WDV at the time of the original transfer, when you have originally transferred this, will be compared with the price paid for reacquiring the asset. The WDV at the time of original transfer will be compared with the price which was paid for reacquiring the asset, and whichever is less will be the actual cost at which it will enter into the block. Actual cost at which it will be entering into the block. Explanation number 4 is, students, asset acquired by an assessee from another person, and that asset is leased back to such other person. Leased back. So therefore, students, in this case is what? I will purchase from you and then I will lease back to you. So it is actually like I will only get it for the purpose of what? To get the depreciation allowance. This is the case of where I take the ownership. I take the ownership primarily only to get a depreciation. Immediately the possession is given away. Immediately, friends, what has happened? The possession is given away. Please understand the difference between 4 and 4A. In the case of 4 and 4A, there is a temporary, I have given you the asset, sold the asset to you. So the possession was not there with me, and thereafter I have bought the asset back from you. So it was a sale and buyback. Whereas here it is a buy and lease back. Means here what has happened? I have purchased the asset from you and I have only retained the ownership. and the asset has been given back to you. So this ownership which I have retained was mainly for the purpose of claim of the depreciation. What I was telling to you that, look, I don't want the asset. I'm interested in that ownership of the asset so that I can claim the depreciation and reduce my profit. And in that particular case, students, the WDV of the asset to the transferor. So the person from whom I have purchased the asset, actually he is the same person to whom I am leased back. So the person to whom I have purchased the asset, whatever is the WDV in his books at the time of the transfer will be considered as my actual cost. So I may try to buy at a abnormally very high price, doesn't matter. I will only be taking, students, the WDV of the asset which was there of the transferor. I hope that all of you are clear with the distinction between 4 and 4A. 4 is what? Sale and purchase. 4A is only, I want only the ownership of the asset. I am not interested in its possession. I will lease back to you. Again, I will lease back to you. I am only interested in its ownership because I want to claim a depreciation. That exactly is the point, students. Rest everything, including the foreign exchange fluctuation, students, I have done it in ICDS. I will request all of you to do ICDS in that particular context. Rest of it, students, we will quickly go through the block rates. As you all are aware, are very important. Now, goodwill part, I will discuss it separately, students. Goodwill, I will discuss this one separately, very carefully, students. Goodwill is an important one. Students, building has got 2 blocks. You will say, sir, which are the 2 blocks for building? So the building has got 2 blocks. First is the residential building. So work from home. They can say to you that there is a work from home which has been done. So if there is a work from home and I am using the building for the purpose of my business or profession, the block would have the 5% rate. MCQ question, make point very carefully done. Now the other building is the normal building, question silent, 10%. Temporary buildings, the third block, temporary buildings, 40%. Temporary buildings, 40%. Now furniture only one block. The best part is furniture only one block, and that one block is how much, students? The one block, students, as you all are aware, is at 10%. Plant is the real notorious block, and the plant, students, be careful, 15%. Can you see that? And it also includes motor cars. It also includes motor car. Okay, now motor car has got another block also. There are 3 more blocks. There are 2 more blocks for motor car. I will show you what exactly are those particular cases. I'll show you that, students. There you have got more particular cases, but that is very specific to a particular date. But what to do? It is there, it is there. We have to respect that. But that is specific to a particular date, but still it exists. I'll give you an example quickly, but before that, plant and machinery, students. Apart from that, ship, vessel, 20%, fine. Now, can you see that the 30% is for, Uber, Ola, all we are aware, Uber and Ola, it is 30%. Normal case. Uber and Ola, it is 30%. Isn't it? Just consider this normal case. I'm not taking you through right now on the dates part, but I'll immediately will take you through the dates part. So, Uber and Ola, normal case, 30%. Let's move forward. I'll just come to the dates part of motor vehicle a bit just immediately after doing this. 40% is for all the big assets. Like, just keep in mind computer, students. Computer is an important one. In the case of computer, please ensure router given. Router will be considered to be a part of the computer. Computer accessories mentioned in the question. By the way, students, just computer accessories mentioned in the question, 40%. Remember, students, in the old course December 2021 examination, they have asked electrical fittings. This was the old course December 2021 exam. Can you tell me what is the rate for electrical fittings? Anyone tell me what is the rate for electrical fittings? This was the old course December 2021 attempt. Quickly, students. Last 10 seconds. Last 10 seconds, students. Electrical fittings. What is the relevant rate of depreciation? December 2021 question number 1 examination. Jay Lakshmi. Students, be careful. This is you have to, students, salute to the ICI. Henceforth, students, I always tell you that at least once in your life, while your article, ICI building, if you see, you just happen to pass, just stand properly, salute it, then go. This every student has to do religiously. See, many times ICI questions are so deep, Vyathi, they are so deep that you need to salute, students. Can you see that? Furniture and fittings, including electrical fittings. This exactly is the game. This is ICI for you. Congratulations, students. This is ICI for you. So, students, whether will you salute it next time when you go and cross to the ICI building nearby to your place? And the answer is yes. You will have to do it, students. This is mandatory. Before you qualify the CA, you need to do it standing on the road. Let others take the picture. Doesn't matter. Did you all got this one? Okay, do it after the examination. No compulsion to do it immediately. You can do it after the exam. Coming to the next one, students. So, in this case, yes, Minakshi. So, coming to this particular part, students, plant and machinery, 40%. Now, computers is a critical part. Students, computer is a critical part. Books, all these are now 40%. All the book, professional books and all, this are 40%. Okay, energy saving devices, again 40%. Air pollution control equipment, all these are again 40%. So, just keep in mind 40%. Now, students, intangible asset, except goodwill, 25. Goodwill, I'll discuss it separately, students, because this is a couple of points. By the way, students, my amendment lectures are also going on, if you all are aware of it. Today, I had a Hindi lecture of amendment. Tomorrow would be English lecture of amendment, Sunday. That amendment lectures are done in the special class, students. So, that is where I'm doing it. Link, I'm actually giving it in my Telegram channel, CA Durgesh Singh. The link I am giving it in my Telegram channel, CA Durgesh Singh. You can just go through that. Tomorrow is the first class of the amendment for English. So there I will be doing very much in detail as compared to what we will do it in the revision. But revision also will touch upon, not to worry. But it will be like a revision. Students, here, plant and machinery, please pay attention here, 45%. Students, can you see this date? August 23, 2019, but before 1st April 2020. Please remember this date. This was a period wherein there was a lot of recession. Government suddenly came up with this particular new block. New block for whom? For Ola Uber. New block for whom, students? For Ola Uber and for other person. Like other person, I'll just give an example of Reliance Industry. Reliance Industry is not in the business of is not in the business of transportation of goods, isn't it? Transportation of goods and passenger. They are not in that business. So let's have two categories. One is Ola Uber and another is Reliance Industry. Now, if Ola Uber and Reliance Industry, if they have not purchased this motor vehicle during this period and put to use during this period, if they have not purchased and put to use their motor vehicle during this period, then the respective rate of depreciation is 15% and 30%. 15% and 30%. 15% for Reliance Industry and 30% for Ola Uber. Every one of you are clear? But if they happen to purchase and put to use the motor vehicle during this particular period, August 23, 2019, but before 1st April 2020, if they happen to purchase and put to use during this period, then for Reliance, the rate would be 30. For Ola Uber, the rate is 45. So Reliance, please be careful. Think of Reliance. Reliance already is having their motor vehicles, which they have purchased not during this date, On those motor vehicle, they are having a separate block of 15%. Whereas this motor vehicle which Reliance has purchased during this particular date, for that they have made a separate block of 30%. For Reliance it is 30. So 15-30 for Reliance, for Ola Uber 30 and 45. Is that clear to all of you, students? Just keep this in mind, students. This is what it would be as far as your point is concerned. Herein, students, proportionate depreciation. Proportionate depreciation, students. You say, sir, what is proportionate depreciation? So, students, in the case of succession, amalgamation, demerger, conversion of a company into, only one important point I will discuss with all of you students. Company into LLP. What happens? In the case of the asset gets transferred from the predecessor to the successor. The asset gets transferred from whom to whom? From the predecessor to the successor. The asset gets transferred. Do you all agree? The asset gets transferred from the predecessor to the successor. And because of this particular transfer, students, what happens in this particular context? Because that this transfer has taken place, students, in this case, therefore, the depreciation is to be calculated in respect of the transferred asset. Depreciation has to be calculated in respect of the transferred asset in a very unique manner. Many students are asking, sir, what is that unique manner? I'll tell you. Students, don't worry. That unique manner is, you will calculate the depreciation for the entire year. You will calculate the depreciation for the entire year as if no such amalgamation, demerger or succession has taken place. As if no such amalgamation, demerger, succession has taken place. So calculate the depreciation for the full year. And thereafter do what? Do the split. Split now the asset into the ratio of number of days the asset was used by them. Students, I'll tell you and I'll warn you in one place. ICI, I've seen one question in capital gains. Obviously, amalgamation, demerger, whenever it comes, there is a capital gains implication also, isn't it? Wherein the cost, which in the case of the successor will be the WDV of the predecessor. All that thing is there. Then there is section 47. The asset which is transferred, it is not a taxable transfer. at the same time, students, at the same time, the shareholder who have transferred their shares to receive the shares of the amalgamated company, in their hands also, students, there is not a taxable transfer. All of you agree to this one? And therefore, students, all of you will pay attention to this. Be very careful. I'm just doing this thing again, and whenever it will come, just keep in mind. In the case of business restructuring, students, please, all of you will take a note of this one. This is such an extremely important point. In the case of business restructuring, please be very careful of the following. In the case of students, the predecessor. Now, business restructuring is amalgamation, demerger, thereafter succession, isn't it? So these are some of the examples which I'm just giving it to all of you. Be very careful about the predecessor and the successor. Now I'm just writing here in the particulars. The first one, students, happens to be this section 47. In the hands of predecessor, it is not a taxable transfer. Not a taxable transfer. Not a taxable transfer. Do you all agree to this one? Okay, this is for the asset transferred. Okay, for this 47 is not applicable. We are only focused. This is only for transfer. Section 47, the share transfer. The share transfer, students. Again, herein not a taxable transfer. Not a taxable transfer. Now, students, in both the cases, the condition is this, that this condition in both the cases is that the successor, the common condition in both, the successor should be what? Should be the Indian company. The successor should be an Indian company, students. Jalakshmi, now, is it fine? Which side is not visible? Left hand side or the right? What you cannot see? Business restructuring, amalgamation, demerger. Quickly say. Okay, sorry. I have to take it up. Okay, I got my head is in between. Okay, successor I have written not applicable. I'll just say, okay, I can see now. I've just taken a note of it. Don't worry, students, I've taken a note of it. I've taken a note of it now. Now, students, point number 3. So, point number 3, students. Please be careful. There is another section 72A. 72A. 72A is not for predecessor, it is for this one. It is for this one. But here only for successor. But be careful, I am writing one point, students. Be careful, I am writing here one point. And what is the point I am writing here? That the amalgamated company should be an Indian company. The amalgamated company should be an Indian company. There are other conditions also, by the way. Mind you, students, there are other conditions also, but just for the simplicity purpose, I am writing only one condition. Amalgamated company should be an Indian company. There are other conditions as well in 72A. Okay. Now, point number 4. 56 to 10. Very important. Whether gift tax will it be applicable? In the hands of this thing, successor, not right, not applicable. Not applicable gift tax. Why not applicable? This is for successor, not predecessor. Please write. Why not applicable? Reason is specific proviso. Reason is specific proviso. Under section 56,210. So in the hands of the recipient, always be very careful. In the hands of the recipient, 56,210 is not applicable in the case of all the amalgamation, demerger, succession, conversion, where the transferor has taken the benefit under 47. Okay, please keep in mind, because this many students forget 56,210 implication because the successor has received the asset. So somebody will say then the fair market value and will be compared with the purchase consideration. No, nothing. No difference of 50,000 and all has to be seen because of a specific proviso of 56,210 which says that no gift tax applicable in the hands of the recipient. No gift tax. Okay, so what I've written here, specific proviso under section 56,210. I have written here, students, not applicable, specific proviso under section 56,210. And the last, students, point number 5, depreciation. Depreciation. Now, depreciation in respect of, right? In respect of the transferred asset. Depreciation is in respect of the transferred asset. So, depreciation in respect of transferred asset, students. So, both amalgamating predecessor as well as successor. Predecessor and successor. And just write a common point for both of them. In the ratio of number of days the asset was used by them. Depreciation in respect of the transferred asset. Please write in the ratio of the number of days the asset was used by them. Please be careful, friends. These are the important areas of your examination question. I am telling you again and again. These are the important areas of your examination question. Are you aware of that? You can expect the examination question on these. You'll say, sir, why you're confident? Because if you see last 6-7 attempts, this concept is yet to be targeted. And it is not that it has not been targeted. It has been targeted. So once every 7-8 attempts, these concepts comes up. So always be very careful. There is always a lull before the storm. तूफान आने के पहले जो सन्नाटा रहता है ना, समझ जाना वही है, students. I hope that all of you are clear with this one. Now, students, one last point and then I move to the additional depreciation. One last point, students, then I move to the additional depreciation. Please pay attention. The point over here is this. All of you, students, the point of this one is this one, students. Be careful. Students, in the question, these people are so smart. What to tell, students? These people are so smart. Do you know what they will do? Say the transferor, students, for transferor, they will give you open WDV, 1st April 2021. There is an open WDV of say 10 lakhs. And then thereafter, on 30th of June 2021, there is a additions of 2 lakhs. Okay, and what has happened? 30th of August 2021, the amalgamation took place. The amalgamation took place. If this is the information, are you aware of this one? Students, are you aware of this one, students? What is the number of days the asset was used in this case? What is the number of days? So here it is 365 days, first one. Second one, you will count from June 1 day, 30 days, July, or may I say herein, out of 365 days, I am just writing, remove April, May and June, 29 days. Okay, so how many days? In this case, it is 62 days. So therefore, 62 days. So 303 days, if I am not wrong. 303 days, students. So 365. So April 30, May 31 and 29. Oh, sorry. Yeah, Jalakshmi, 275. sorry, 275 days. Student, 275 days. Please be very careful. This is 275 days. Amalgamation has happened on 30th of this thing. So please be careful. Do you know what you have to do? On that 10 lakhs, say depreciation is at 15%. So how much depreciation on 10 lakhs? 1.5. Here it is 30,000. Please ensure on one thing. Students, please ensure on one thing. That this 1.5 lakhs and this 30,000. So 1.5 lakhs divided by 365 into, for amalgamating company students, how many days? Amalgamating company, April 30, May 31, June 30, July 31 and August 30 days. Oh, sorry. Be careful. You are wrong, students. It is not 30 days in August. The day of amalgamation, students will go to whom? The day of amalgamation, students will go to whom? To the amalgamating company. Sorry, to the amalgamated company. So can you tell me, for the amalgamating company, what is the number of days? For the amalgamating company, what is the number of days? For the amalgamating company, the number of days, students, that you can see is 61, 91, quickly, 151 days. Now, this is for which asset, students? The first asset, 1st April. This is for 1st of April. Okay, 1st of April. So, 151 days for the amalgamating company. And how many days for the amalgamated company? For the amalgamating company, the balance. Balance is how much? Balance is, students, 365 minus 151. Quickly. $365 minus 151. 214. So this is for that asset. Which asset? 1st April. So this 1.5 lakhs of the depreciation from that 1st April asset, that 1.5 lakhs of the depreciation which you have you got it from the asset which you have acquired, which was there on 1st of April, you will split into 151 divided by 365 for amalgamating company and 214 divided by 365 for the amalgamated company. Did you all got this one? What about for that additions made on 30th of June? For the 30th of June, then June 1 day, July and August 29 days. So this gives you 61 days, students. 61 days for the amalgamating company and 214 days for the amalgamated company. All of you agree to this one? 61 days is for the amalgamating company and 214 days is for the amalgamated company, isn't it? So therefore 61 divided by 365 into 30,000, and for the amalgamated company it would be 214 divided by 365 into 30,000. This is for the amalgamated company. You have to do it separately like this, otherwise you'll make a mistake. I hope that all of you are clear. I think this was the ultimate thing which I thought of doing with you, but this is where people will go wrong. With that, now students, we are done with this particular part now. With this one, we are done with this one. Now, additional depreciation, students. Additional depreciation concept as such, every one of you are aware. So, no point of me to really do about this one. But yes, I'm very keen on one thing, students. Now, motor vehicle, students, can you see this chart on motor vehicle? The chart on motor vehicle, students. I've already made this chart of motor vehicle. Yes or no, what I taught you just now. So, depending upon this one. So, motor vehicle chart has been given to you. Now, my question here to all of you is about this one. Additional depreciation. Students, as you all are aware that additional depreciation which has been there, in these cases it is not allowed. In many cases, students, it is not allowed. I think all of you are aware of this. In many cases, additional depreciations are not allowed. Isn't it? These are the negative list. These are the negative list, students. Do you all agree to this one? These are the negative list, students. In which case that additional depreciations are not allowed. So what are the negative list? Like for example, ship and aircraft. Then there are other things also which are being there. Then there are other things also, students, which are being there. On that also you don't get this particular. On that also, students, you don't get this particular additional depreciation. Thereafter, students, in this particular case, you will find that second-hand plant and machinery, then the office premises and all this stuff, guest house, office appliances, road transport vehicle. All these items, students, which you can see, all these items, students, that you can see, they all are in the negative list. I think all of you are aware. I'm not discussing much on this. Students, only one thing which I wanted to discuss with you so far as additional depreciation is concerned, and that one thing is, students, is what, students, in this context? Are you aware of this one, students? That one thing, there's one thing which has been there so far as the additional depreciation is concerned. And that one thing which has been there, students, is about what? Are you aware of that? In this case, it is about, just a second, students. Just a second. So this one thing, students, which has been there in respect of, just 30 seconds, students. If an assessee is taking the alternate tax regime, students, if you have taken the alternate tax regime, whether the additional depreciation, is it available? Whether it is the case of company 115BAA BAB, whether it is a case of an individual 115 BAC, or for that matter cooperative society 115 BAB, is the additional depreciation of 32(1)(2)(a), is it available? Answer is no. Answer is no. So always keep this particular point in mind. Students, always keep this particular point in mind. Additional depreciation is not available in that particular case. Students, in this particular situation, one more adjustment which is very popular by the ICI, they will give you the last year. They will give you what? The last year, and in the last year it will be 10%. Students, in the last year it would, last year asset information, and they will tell you that the asset was put to use for less than 180 days. So you will have to be very careful not to make a silly mistake that if that SSC is a manufacturing company, then that additional depreciation you would have claimed of only 10% in the last year, isn't it? So therefore the balance 10%, please don't make the mistake. You have to drag it in the current year. You will have to drag it in the current year, students. Did you all got this one? You will have to drag it in the current year, students. I hope that all of you are clear with this one. Fine, students. With this, students, we are done with this particular part of the depreciation part. Again, I am repeating herein that remaining part you can read it out. Students, it's the simplest one of the entire lot which has been there. One point which I just wanted to discuss, students. One very quick point. Students, one very quick point of revision. Very quick point of revision, students. And that is about, students, that is about the case of the second hand imported plant and machinery. Okay. Students, there are two cases which is eligible, that is considered eligible, and two cases it is ineligible. Please take note of this one. Two cases it is eligible, and in two cases it is ineligible. Do you want to know in which cases it is eligible and in which cases it is ineligible? So the cases in which it is eligible is, be careful, students, I told you already. The cases in which it is eligible, it is 115 BAB. That is the alternate tax regime for the company. And second one, students, is 35 AD. 35 AD. We will do it. I'm just making the consolidation chart. I'm just doing the consolidation chart. The second hand imported plant and machinery is eligible for a domestic company. This is for domestic company under alternate tax regime and 35 AD. Ineligible in which case? Just now you did. Ineligible in which case, students? Just now you did 3212A, 3212A, and second is 54 GB newly startup. 54 GB students newly startup. In the case of 54 GB exemption, that newly startup entity which has to invest into the eligible plant and machinery, that eligible plant and machinery cannot be a second hand, any second hand, be it imported or domestic, doesn't matter. Though there are two cases where a second hand imported plant and machinery are considered eligible. When I say eligible, eligible means, it means, you can write here, it means as good as new plant and machinery. As good as new plant and machinery. For these two cases, it means as good as a new plant and machinery in these two cases. All of you are clear with this one, students, then I will proceed further. If all of you are clear with this one, students, then I'm going to proceed further. Fine, students? Are you all through? Then I'm proceeding further, students. Example on what? Are you all through, students? Then I'm proceeding what? Example on what? If you can tell me, I can just then make the example. You'll say, sir, but we have yet to do this capital gains. I'm making a consolidation chart here for multiple revision, so that when you do there, you will be in a position to revise it. Okay. Now, students, come to the other area. Now, what did I told you? Our big deduction, one very big section 32 is over. Except for, I told you ICDS, you will do it because that ICDS will capture what? Your actual cost concept. That ICDS will capture your actual cost concept. Okay. One very big deduction is over. Charging section is through. Now we are into the small deductions. Small deductions of PGBP, students. Can you see that? The small deductions of PGBP. Now, students, in this particular context, in the case of this is a very important chart for all of you, because as per this chart, you will be getting all the employee related provision at one place. So this is such an important chart. All the employee related deduction at one place. And take it from me, May 22, November 22, I find it very strongly that you may get an employee related provision in the examination this time, especially to do with the employer contribution to the recognized fund and other things. This contribution to the fund part is the most important adjustment for the upcoming May 22, November 22. Obviously, for the reason being, last 2-3 attempts I have not seen, not 4-5 attempts I have not seen the adjustment relating to this. And since there is an amendment also, that's the reason why. Let's quickly run through this one, students. All the employer related 36 deduction at one place. Deduction in respect of the employee, students, over here in this context. So all the employer related 3611B. Premium paid by the employer for health insurance of the employee, students. Can you see that? Health insurance of the employee, students. So in the case of the health insurance of the employee, you can see that the premium should not be paid in cash. That's the only criteria. The premium, students, should not be paid in cash. This is the only criteria. The next one is an important one, bonus and commission. This bonus and commission is linked with section 43B. This bonus and commission, students, is linked with section 43B. What does this bonus and commission concept says? Students, what does this bonus and commission concept says? Please pay attention. As per this concept, what it says is this, that the bonus and commission should be actually be paid. This bonus and commission, students, should be actually be paid to the employees. So therefore, because it is linked with 43B, obviously we all are aware that the grace period of due date of filing of return of income is available. To claim a deduction in the same year, you need to make the payment up to the due date of filing of the ROI. If paid thereafter, then the deduction would be given to you in the subsequent year. Now, the only important criteria to be fulfilled over here is this, that the only important criteria, students, that has to be fulfilled over here is this, that this bonus should not be paid in the form of dividend to the employees. So please pay attention. The adjustment in the examination would be like this, that the employees would be also the shareholder of the company. Maybe they will give you a closely held company, and in that closely held company, the employees are also the shareholder of the company. Considering the fact that there are 4 shareholders and 25% each, and they are also the employees. Now, if there are 4 shareholder students, then the dividend should be the same for all the 4. But suddenly you will find that these employees who are also the shareholder, they are given dividend disproportionately. They are given the dividend disproportionately. So whosoever are getting lesser amount of dividend, for the same number of shares, the proportionate loss of revenue on account of dividend may have been compensated to them in the form of bonus. Isn't it? And therefore, students, just keep an eye on that particular information in the question in the exam. This information should be kept very firmly in the examination, because this is where they are playing the trick in the examination. I hope that all of you are clear with this one. Students. Perfect. After this, students, if you see, thereafter, students, 3614, 3615. Now, this is for, now one adjustment is very popular, which keeps coming up in your every 3rd or 4th attempt. They will say to you that there is a debit. Students, there is a debit in respect of the employer contribution to the staff welfare trust. If this is the kind of a debit which has been given to you about the employer contribution to the staff welfare trust, then what is that you are going to do, students? Simply disallowed. Students. This is what I'll suggest to you. Employer contribution to the staff welfare trust. You are going to simply disallow that particular expenditure. Why? Because when they use the term staff welfare fund or the staff welfare trust, they are all unrecognized funds, and therefore you will disallow it when you deposit the money, when the employer contribute his contribution in these staff welfare trusts which are unrecognized in nature. You will disallow it. There is a section for that. That section is, students, section 40A9. Now please pay attention. Your 15-20 minutes, your mind has to be very much sharp now. Please pay attention. The next particular part, students, which has been there, what if from the staff welfare trust, the amount is finally actually paid to the employees? So at the time of deposit to the staff welfare trust by the employer, you said disallowed. What if tomorrow from the staff welfare trust, the amount is finally deposited to the account of the employee? What will be your take on this? Will it be allowed as deduction or not? Will it be allowed as deduction or not, students, at the time when the amount is finally paid to the employee at that point of time? Whether the deduction, will it be allowed or not, is my simple question to all of you, Mamta, and the answer is yes, it will be. And that deduction would be 37(1), general deduction. Because see, the entire scheme is like this: when you deposit to an unrecognized fund, we don't trust you. We don't trust you that it is actually meant for the benefit of the employee. We don't trust you. that it is actually meant for the benefit of the employee. But when finally from that particular trust account or that unrecognized employee fund account, the money gets spent to the employee or paid to the employee, at that particular point of time, we are at peace that yes, the deduction is now allowed. Because now it is given to the employee. Point number 2, please pay attention. Point number 2, this was example number 1. Example number 2. I have deposited the money. Students, please pay attention. I have deposited the money. I means the employer has deposited the money in the employee welfare trust. The employer has deposited the money in the employee welfare trust. And this is the recognized, like gratuity fund, superannuation fund, pension fund, all these are the recognized. So when the employer makes the contribution to the fund, at that point of time, students, will the deduction, will it be available at the time of contribution to the fund? And the answer is yes, it will be available, because there are specific provision which allows the deduction of the employer contribution to these recognized funds. There are provisions of section 3614, there are provisions of section 3615, there are provisions of section 3614A. All these are the sections which allows the employer to get the deduction on his contribution to all these recognized staff welfare fund. Okay. But subsequently, when the amount is finally paid, students, please pay attention. Subsequently, when the amount is finally paid to the employee, from this fund, then in that case, what you will do? Will you be giving the deduction? Answer is no. Why? Because you already gave the deduction at the time of deposit in the welfare fund. So there are two particular important points which is there, that if the employer makes the deposit to the staff welfare trust, only a staff welfare trust, so we will say it is unrecognized, and because it is unrecognized, disallowed under 40A9. But if the question stretches further, that it is actually paid to the employee from this particular unrecognized fund, then at the time of making the payment, to the employees, the deduction will be allowed. At the time of making of the payment, the deduction will be allowed. That is the point number 1. And the second point, students, which has been there, which I have told to all of you. And the second point, students, which is there, which I have told to all of you. And what is the second particular point, students? The second point is, if the employer makes a contribution to the recognized funds like gratuity, pension, provident fund, then at the time of the contribution, students, I will say that the deduction is allowed as per 3614, 3615, 3614A. But from the fund, if the amount is actually paid to the employee thereafter, then please don't give the deduction, because this will result into deduction 2 times. Is that clear to all of you, students? I hope that all of you are clear with this one. Now, second point. When, students, you are contributing to the gratuity fund, students, when you contribute to the gratuity fund, approved gratuity fund, can you see that 3615? When you are contributing to the approved gratuity fund, which is section 3615, students, you should be aware of this point. Students, here, if they tell you there is a provision for gratuity, because this is how the ICA has twisted in the examination. Please pay attention. Provision for gratuity. Students, provision for gratuity, if it is debited in that profit and loss account, then that provision for gratuity will be disallowed. Do you all agree to this one? Provision for gratuity, then that provision for gratuity will be disallowed. I hope that all of you agree to this one. Provision for gratuity, it will be disallowed. Okay. But now you have got two options. Employer, you have got two options. From the provision, either you deposit the money, your contribution, in the gratuity fund. That is option number 1. So if you deposit the money in the gratuity fund, you will get the deduction under section 36(1)(5). You'll get the deduction under section 36(1)(5). Or the second option is you directly make the payment of this gratuity to the employees. You directly make the payment of the gratuity to the employees. You directly make the payment of this gratuity to the employees. Now here I just want to bring an attention to a particular point here. Be very careful. Students, supposing this is your previous year, just pay attention students over here. This is your previous year 21-22. Fine. And then there is an assessment here in this context, 22-23. Now, provision for gratuity was done. Provision for gratuity is done, students. Fine. Now, this is what it has been done. So, what we have said, 40A7 disallowed. Okay. Now, they are giving you option. Students, this is 139(1) written. 139(1) ROI due date. ROI due date, students. And thereafter, here I am giving you two things. Option 1. Here and option 2. So the first option, students, which has been there in this context. What is the first option? The first option, students, which has been there is that employer contributed to the gratuity fund. That is the first option. And the second option, students, which is, or second one is employer paid directly to employee. Employer paid directly to the employee. What will be the treatment in these two cases, students? What will be the treatment, students, in these two cases? Be careful, students. These are the very critical stages of your discussion. So one thing is there that if it has been contributed to the gratuity fund, students, then we will say what? If it is contributed to the gratuity fund, students, are you aware of that? If it is contributed to the gratuity fund, students, then in that case, what will happen? The deduction would be allowed. Deduction allowed under section 36(1)(5) read with 43B, and under which section? Under in which year? In the previous year, same previous year, 21-22. 21-22. And the second case here, the deduction would be allowed. Deduction would be allowed under section 37(1), because it is not under the fund. You are giving it directly to the employee under section 37(1). And that would be allowed under section 37 under which previous year? 22-23, because there is no grace period. Only when you contribute to the fund that there is a grace period. Here there is no grace period. I hope that all of you are clear with this one. All of you are clear with this one, students? So there is no grace period whatsoever in this case. When you pay the amount directly to the employee from the provision, if the amount is paid directly to the employee, please be very careful that there are no grace period in this case. If you all are through with this one, students, can I proceed? Please let me know. Fine, students. Students, it is advisable that as much as possible attend the live sessions only, because all of you, unless there are some pressing urgency, because at least through the live sessions, at least you are in a position to complete it. The days are fixed, Saturday and Sunday. So obviously it is not such great thing that I'm taking your time, because even a revision to do an offline becomes a bit of challenge many times. Obviously many students do the offline revision because they cannot do it. Jobs are there, other things are there. But if you can manage it, please do this. Good for you only. That is what I can just say to you. I will not speak anything beyond this. So this is what it is. Fine. Now we have completed up till here. All of you agree to this one? We have completed, students, up till here. Now the amendment part. Big amendment, and this is the reason why I was telling you, very important. What about the employee this was all the discussion about the employer contribution. Now I am doing with you the employee contribution under section 36(1)(5)(a), and that is in respect of the contribution. See, the employee contribution, all of you are aware, it will be considered as the income of the employer. Point number 1. Always keep in mind, it is to be considered as the income of the employer. That is point number 1. And point number 2, students, is, I'm talking about the employee contribution, students. Point number 2 over here is this, that in respect of the employee contribution, students, only when the employer deposit the money within the due date of what, students? Within the due date of the fund. This is the amendment. Earlier there was a litigation whether due date of fund or the due date of filing of the ROI, but now the litigation has been put to a rest. Now the deduction would be given to the employer only when they make the deposit or the contribution within the due date of the fund. Fund, students, I am using this word. So only when they make that deposit within the due date of fund, that the deduction would be made available to them. I hope that all of you are clear with this one. All of you. And that exactly is the point. So what if they will give it to you that it was deposited after the due date of the fund? So you will simply say that, don't use the word disallowed. Please don't use this word disallowed. Why it is not to be used as disallowed? Because see, the employee contribution is considered as the income of the employee. So where is the question of disallow? Disallow is only in respect of the expenditure which is debited. So employer contribution is the expenditure which he has debited. In respect of the employer contribution, you can talk about disallowance. Employee contribution, his contribution when it has been deducted by the employer from the salary of the employee, it is the income of the employer. It is the income of the employer. And thereafter we discuss what? That subsequently at the time of deposit, the deposit will not be allowed as deduction if the employer makes the deposit after the due date of the fund as per the Finance Act 2021. Clear? Last point, students, on the employee and employer, this point. Last point, students, herein is this. Last point is this one, and this is about this part, 36(1)(4)(a). Why I am focusing on this one? Because one time they have targeted a question on this. And this was a bit of a practical question. Students, the employer contribution to the NPS, to this particular NPS scheme, the National Pension Scheme or the recognized pension scheme, this particular amount, employer will be eligible for deduction. Okay, employer will be eligible for deduction, but be careful, the contribution should not exceed 10% of the salary. So in the examination, I remembered they gave you what was the actual contribution made by the employer towards this pension scheme. And thereafter, they also told you what was the salary of the employee. They also told you what was the dearness allowance of the employee forming the part of their retirement benefit. That was also known. So what we need to do was, whatever was the actual contribution the employer made in the pension scheme of the employee, that amount will then be compared with 10% of that amount will then be compared with 10% of the salary. Salary means the basic plus the dearness forming the part of the retirement benefit. So the 10% of that, so in that particular context, basic plus the dearness allowance forming a part of the retirement benefit. Basic plus the dearness allowance forming a part of the retirement benefit. This particular total is what needs to be considered, and of this you take 10%. Of this, students, you take 10%. Employee contribution is an income, Jayalakshmi. For the employer, it will be considered as the income. Okay, now of this 10%, whatever is the amount, students, that you get. Of this 10%, whatever is the amount that you get, students, always keep in mind. Of this 10%, whatever is the amount that you get, students, this amount you will compare with the actual contribution of the employer. So whatever is the actual contribution of the employer, please do the comparison, and thereafter the excess, students, all of you are aware, the excess would be what? The excess portion, I think all of you are aware now, the excess portion, students, will be disallowed. The excess portion, students, will be disallowed. How disallowed? This excess portion will be referred as what, students? As the contribution to the unrecognized fund. As the contribution to the unrecognized fund, this is what you're going to refer this excess portion as. And all we know, because only up to 10% is recognized. Only up to 10% is recognized. So anything beyond 10% is unrecognized, and therefore disallowed under which section? 40A9. Anything beyond 10% is unrecognized, and therefore disallowed under section 40A9. I hope that all of you are clear with this one. Every one of you are clear. Fine, students. So this is what the situation is, and that exactly is the game. I hope that every one of you are clear. So with this is done. Now the last one very peculiar employee expenditure is about the family planning, wherein you all know capital expenditure in full, revenue expenditure in full, capex 1/5, and the unabsorbed capex expenditure, students. The unabsorbed capital expenditure on the family planning, all of you are aware. Unabsorbed capital expenditure on the family planning, all of you are aware of what? That it will be treated at par with that of, can you see that? The unabsorbed capital expenditure on the family planning will be treated at par with that of unabsorbed depreciation. Unabsorbed depreciation. Another point is, there is an amalgamation, students, then 2/5 has been taken by the amalgamating company, then whether the balance 3/5 deduction on that capex on the family planning, will that be allowed to the amalgamated company? To that the answer is yes. So even this is done. Now my homework, students, would be 37.1. Students, 37.1 general deductions, you all will do this. What is for the purpose of business and profession? Just ensure on the right hand side, 37.1, the general deduction, I have given you the entire list of it. They are simple one. However, only one point I just wanted to discuss with all of you. Is about this one. The fee which is paid for the delayed filing of the TDS return. The fee which is paid for the delay payment of this return. Friends, you tell me. I am a deductor. I have to deduct the TDS. But what I did was that I have filed the TDS statement which I have to file quarterly. I have filed the TDS statement which I have to file quarterly late. Because I filed the TDS statement late, there was a fee that was being charged under 234E, which we all are aware, 100 rupees per day. So that fee is what has been charged. Will I be getting the deduction on that particular fee? And the answer is yes. Students, the fee is not in the nature of a penalty. And because the fee is not in the nature of a penalty, therefore explanation to section 37.1 is not applicable. Explanation to section 37.1 is not applicable, and therefore it is allowed as deduction. Now, apart from that, point number 17, compounding fee paid of violation of the building norms. Violation of what? Building norms. So obviously there are illegal construction that you have done. Now this is an infraction of law. Now just to get restored, because obviously there are this thing that people cannot, because people are staying. Now we all know, students, that if the builder who has constructed the building illegally, because the life is involved, if they pay a compounding fee, then the demolition will not take place. But is it illegal as per the FSI chart will not change. The local authority chart of that building will not change. What is legal only would be there. But this is additionally that you have done illegal construction to ensure that there is no destruction of this particular, demolition of this particular building, that they pay a compounding fee. So whether that compounding fee which has been paid by the company to ensure or to restore the building the way it is, whether that compounding fee, will it be allowed as deduction? Answer is yes, it will. Sorry, answer is no, it will not be. Because this is essentially a payment that was being paid by you for an infraction of a law which you have done. So this was an infraction of law that you have done, and just to ensure that this is not demolished, that the compounding fee has been paid. But by paying the compounding fee, it does not mean that your illegal construction becomes legal. No, that is not the case. And hence, this compounding fee paid is something which is disallowed. Now, again, this part, students, which you should keep in mind, donation paid to Swachh Bharat Kosh and Clean Ganga Fund. So, in that particular case, students, deduction is not allowed. But ATG is there, students. Just keep in mind that. But ensure that in ATG, there is a 2000, the donation should not be paid in cash in excess of rupees 2000. So, you get ATG deduction. But do ensure on one thing, that the donation which is there, that donation is not given to you in excess of rupees 2000 in cash. Last point, students, which I will discuss about this particular part, which is about, students, illegal expenditure like penalty. Now please ensure one thing, penalty as per the law disallowed. Students, penalty as per the law disallowed. In this particular case, students, penalty as per the law is disallowed because it is a payment which is made because of the infraction of the law. It is a payment which is made because of the infraction of the law. So the penalty is disallowed. That is point number 1. Okay, that is point number 1. Penalty for the contract, is it disallowed? No. Contractual penalties are allowed. Okay, so therefore that is another point. Now, illegal expenditure, is it disallowed? Yes. But what about if there is a stock in trade like cocaine or narcotic substance which has been confiscated on account of search which was conducted in my premises, and therefore there is a loss of stock in trade. There is a loss of stock in trade. So whether that loss of stock in trade, will that be allowed to me as a deduction? To that the answer is yes, because the explanation to section 37(1), the explanation to section 37(1) talks about the disallowance of the expenditure which is illegal in nature. The expenditure which is illegal in nature. Whereas here, the deduction which I am claiming is not of an expenditure, but is of the trading loss. And hence I will say that the deduction will be allowed to you. Hence I will say, students, that the deduction will be allowed to you. I hope that all of you are clear with this one, students, in this particular context. So this is how the things has to be looked upon, students, in this scenario. So students, this is the situation which has been there in this context. Now, thereafter, one more last point, students, the legal expenditure for bonus issue, the legal expenditure, students, for the right issue or the initial public offer. So if we look into that particular part on the legal issue, legal expenditure. Now the legal expenditure, students, if you talk about it, what we will find is this, that as far as the bonus issue is concerned, please pay attention to this point very carefully. All of you will pay attention here very carefully, this part. Students, whether it is a bonus issue or whether it is a right issue, you will write one sentence, students. Please write one sentence. Whether it is a bonus issue or whether it is a right issue, whether it is a bonus issue or whether it is a right issue, comma, the expenditure incurred on increasing the expenditure incurred on increasing the authorized share capital. The expenditure incurred on increasing the authorized share capital shall be on increasing the authorized share capital shall be disallowed. Shall be disallowed as it is a capital expenditure. As it is a capital expenditure. Full stop. It is only in the case of the expenditure incurred on the issue of the right shares and on the issue of the bonus shares that the answer will change. That is on right share disallowed and on bonus shares allowed. On right shares disallowed and on bonus shares allowed. Right shares means the fresh issue. I hope that all of you are clear. This is what it is, students. I have discussed this point. Can you see that, students, here? The employee contribution and the employer contribution here. I have already given this table, so don't worry. This is already captured in our chart. I have captured, students, this one in the chart, employer's contribution to the recognized fund and the employer contribution to the unrecognized fund. I have discussed this thing with all of you. Employer contribution to the recognized fund, what is the treatment? Recognized fund, students, you know the treatment. And unrecognized fund, students, you know the treatment. And from the fund, if the amount is paid to the employer subsequently, then also you know the treatment. What will happen? I hope that this point is taken care of. And also the provision for gratuity, which I have discussed with you, all of you, just now. With that, students, now we come to our last segment, students. Today's last segment, finance charge. Why? You'll say, so why last segment? Because tomorrow morning, 7 o'clock, fresh mind, I am going to do with you the sectorial provision, the big guns, 33AB, 35AD, banking companies. So fresh mind, all the big gun, students, profit link deductions. Are you ready for that, students? All these big guns provision, students, we are going to discuss it tomorrow, students, morning time. So let's finish it off with our target that we had for today. TGBP, students, please like the video and also ensure to share the video among the friends. Please tell them not to miss it and do request them to attend the live sessions. Okay, if possible, wherever possible. Like it and share it is your responsibility, students. So that is the responsibility at your end, students. Got it? Now, finance charges. You'll say, sir, what is finance charges? Finance charges, obviously. If you see, I can give you the list of finance charges in the head PGVP. You'll say, sir, at least say something. So, one is about the interest on the borrowed capital. Interest, students, on the borrowed capital. So, that is already there. So, that is there, 3613. I'm sorry, I'll just do the settings, students. Unfortunately, tomorrow I cannot do the settings, but I'll definitely do the settings day after tomorrow. Okay, Monday, so that next class onwards, this is well taken care of. What are the issues that you are facing presently? Okay, that half area is getting cut, isn't it? I'll take care of, I'll ensure, because I'm looking into this one, so at least have a link what exactly is there. So don't worry, I'll ensure that there's no impairment of your understanding of the content which is written on the left hand side. But I'll change my setting accordingly. Discount on the debenture, students. Discount on the debenture, students. If you can see in this regard. So, sorry, discount on the zero coupon bond. Again, this is a finance charges. All of you agree to this one. Discount on the zero coupon bond. Is it a finance charges? To that the answer is yes. It is also finance charges. Bad debts. Deduction of a bad debts. Is it a finance charges? Obviously, it's a credit. So credit relates to finance. So that is also the finance charges. So there are three sections which are essentially to do with the financing activity. There are three sections, students, which are essentially to do with the financing activity. Now, just all of you will pay attention to each of one of them, one by one. So, students, here what happens? Interest paid on the capital borrowed. Interest which is paid on the capital borrowed. Students, obviously, we all are aware that up to the date the asset is put to use, supposing the loan was borrowed for the purpose of acquiring the asset, then up to the date the asset is put to use, the interest expenditure on that particular loan amount, will be capitalized. And only after the asset is put to use, that the deduction would be allowed. But be careful. The deduction that you want to take, be careful, students, what I'm saying now. The deduction, students, that you want to take will be what, students? The deduction, students, that you want to take in this particular case will be, I think all of you are aware of it now, will be subject to its actual payment under 43B. Because if the borrowing has been taken from the bank, then don't you think that you have to make the actual payment? Only then you got the deduction, and the answer is yes. So please be very careful that if a loan has been taken for acquiring the asset, up to the date the asset has been put to use, the interest expenditure will be capitalized, and only after the asset is actually put to use, that the interest expenditure will be allowed as deduction. This is exactly what this point is all about. But again, I'm repeating this point. The deduction will be subject to 43B because obviously you may have taken the loan. Other than that, students, there are other important part, because be careful on one thing, that this deduction of interest expenditure, is in respect of the loan amount. This deduction of the interest expenditure, students, is in respect of that loan amount, which has been borrowed for the purpose of business and profession. It is not necessary that it should be used in the SSC's own business and profession. And therefore, if the SSC has taken the loan and has given that amount to its associates at a concessional rate or interest-free rate, that loan amount has been given to his associates at a concessional rate or at interest-free rate, can we say that the loan amount has been applied for the purpose of business and profession? Can we say that the loan amount has been applied for the purpose of business and profession? To that the answer is yes, we can. This was something which was asked in the last attempt only. I don't know whether it's old or new, but it was being asked. And it was being said that Reebok India, Delhi High Court judgment is there already. And as per the Reebok India, Delhi High Court judgment, students, what it has said? It has said that such giving the loan amount to the associate is indeed for the purpose of business and profession. Giving the loan amount to the associates is indeed for the purpose of business and profession, and hence should be allowed as deduction. I hope that every one of you are clear with this one. Students, if I have taken a loan to pay the dividend, then will that be considered as for the purpose of business and profession? If I have taken the loan for the purpose of payment of dividend, will that be considered as an expenditure which has been used for the purpose of business profession? What is your take on that? Will it be considered or not as being used for the purpose of business profession? Loan taken for the purpose of payment of dividend. Because if you say yes, then I will get a deduction of interest. If you say no, then I will not get deduction of interest. So it's up to you, students, to decide what you want. You want a deduction, so you say yes. If you don't want deduction, say no. This is the kind of choice which I have given it to all of you. Say what you think. Yes or no, students, or no comments. The best is no comment, students. The answer to that, students, is yes, it is considered as being used for the purpose of business. Students, you'll say, sir, prove it. I'm proving it now. Consider two companies. One company is regularly paying dividend versus another paying which does not make the payment of dividend. One company is regularly paying dividend versus the another company which does not make the payment of dividend at all. So the company which is regularly paying the dividend, I think all of you are aware of that company, isn't it? The company which is regularly paying the dividend amount, students, you yourself can say that it will have a very better image in the society, in the market, with the business associates, and obviously the terms of doing the business will be very easy for this particular company which is regularly paying the dividend. The term of doing the business would be very, very easy for this company which is regularly paying the dividend, as against to the other company which is not paying the dividend regularly. For that company, the terms of doing the business would be very tough. All of you agree to this one? And therefore, if I have taken the loan for the purpose of payment of dividend, then the interest on such loan amount will be allowed as deduction. Interest on such loan amount will be allowed as deduction. Point number 2, if I have taken the loan for payment of indirect tax, then if I have taken the loan for payment of indirect tax, will the interest on such loan amount, will that be allowed as deduction? If I have taken the loan for the purpose of payment of my indirect tax, whether the interest on loan, will that be allowed to me as a deduction? To that again the answer is yes. To that again the answer is yes, because indirect tax is a tax on the activity of business, and because it is a tax on the activity of business, it is a business expenditure, and hence the loan taken to meet up the business expenditure, the interest on such loan will be allowed as deduction. But take another thing, Meenakshi, take another particular case wherein the loan has been taken to pay your income tax. Now, is the income tax a tax on a business income or it is on the total income? So the income tax is a liability on the total income of the person. The total income of the person, and since it is an income tax liability on the total income of the person, therefore, students, the interest on such particular loan amount will not be allowed as deduction, because what? It is a loan which has been taken for personal purpose and not for the purpose of business. Now, students, coming on the other part, students, herein. Other part, students, is the bad debts. Now, so far as the bad debts is concerned, students, 3617. In the case of bad debts, students, there are two conditions should have been fulfilled. One, the debt should have been considered as the income of the assessee for any earlier previous year. The debt should have been considered as the income of the assessee for any earlier previous year. That is the condition number 1. And the second condition is this, that the assessee should have actually written off the debt in his books of accounts. So first is that debtor should have been considered as income of any earlier previous year, like for example credit sales. And the second condition is that the debt should be actually written off in the books of accounts. Only when both the conditions are fulfilled, that the deduction under section 3617 is available. Are you clear with this one, students? That the deduction under section 3617 is available. Now, students, here there was an ICDS impact. See, generally what happens, we all are aware, when we make our books of accounts, students, we make our books of accounts on the basis of prudence. So if there is no certainty of the income, if there is no certainty of getting that particular income, if there is no certainty of what, students? If there is no certainty of receiving that particular income, then definitely, students, I am not going to recognize this amount as my books, in my books of accounts, isn't it? But ICDS, say for example, any ICDS which compels you, like for example ICDS 4. If ICDS 4 on revenue recognition, if it is compelling you that no, you have to recognize for tax purpose, even though you may not have recognized this amount as your income for book purpose, but for tax purpose, you are supposed to consider this amount as the income as per the ICDS. So what would have happened? In the books, it is not captured as the income, but for tax purpose, while computing my total income, I would have added this income. And because that I have added this income, accordingly I have paid the tax liability on this income which formed part of my total income, although the amount has not been considered in my books of accounts. Now subsequent year, what is the case? In the subsequent year, it is established that no money is going to be received from that particular person. Now I am in a disaster. Position now, students. Why I am in a disaster position? Because to get the deduction of bad debts, I need to write off the debtor account from my books. But can I write off the debtor account in my books? Answer is no. I cannot write off the debtor account from my books. So therefore, in this case, students, what will happen? I cannot do any write-off, and because I cannot do any write-off, it is full loss in my part. And therefore, the amendment was made as per which they have said that in respect of such kind of a scenario, that because of ICDS, you have been taxed earlier on the amount which was not recognized in your books. It is deemed to have been written off. It has been deemed to have been written off in the subsequent year, and you will get the deduction. So that is the point, students. And the last point, students, is this. That the amalgamation has taken place, students. The amalgamation has taken place. So I have taken over the debtor of the amalgamating company. And who am I? I am the amalgamated company. So the amalgamation has taken place, and I happen to take over the debtor of the amalgamating company. And subsequently, I want to write off the debtor of the debtor which I have taken over. I want to write it off in my books of accounts. So if I want to write it off in my books of accounts, can I do that? Or can I claim a deduction in this context? Whether the amalgamated company, can they be eligible to get the deduction of bad debts which they have written off in the books of accounts? Bad debts of which bad debts? The bad debts of the amalgamating company. Can the amalgamated company get the deduction in respect of the same on its actual write-off? And the answer is yes, they can. Why is it so? Because the deduction of bad debt, students, the deduction of bad debts is a deduction that you actually give to the business and not to the assessee. The deduction is not given it to the assessee, but it is given to the business. So if the business is continued by the amalgamated company, then in computing the profit and gains of the from that business, the deduction of bad debts being written off in the books of accounts will be allowed. I hope that all of you are clear with this for now. So this is what it is. I think we have discussed now the bad debts completely. Banking, cash transaction tax, security transaction tax, and all this is done. Students, that is it. Students, today we are through with a marathon session. Tomorrow 7 to 1 we are going to meet up, and I am telling you tomorrow's session would be on a big dose section. 33 AB, 3617A, banking company, 35 AD, profit linked deduction. All the big guns are going to shoot tomorrow, students. Are you ready for this one, students? Do like the video and keep sharing this video, students, and ensure that your friends also attend the live session. Fine. So that is it, students. One quick announcement in that scenario, if I may just tell you the announcement in this case. Again, many students are asking about the chart. From where we will get the chart? Students, I am telling you again and again that you are going to get it. Students, as you all are aware, the charts you will be getting it 97794300034. That is the number of the bookseller. You can contact there and take the physical copy. 977 94 Okay, contact there and take the book copy. Iconic program students, the flagship program of the Unacademy students. I think all of you are aware of that. Now, on this particular context, flagship program for CA Farm students, live mentoring platform students, wherein one-on-one doubt solving session, evaluated test series is there, wherein 3 test series for each paper has been given. Printed books are given here in Iconic. Next is your Discord, a dedicated Telegram channel, live classes, weekly test series, study material, unlimited access, structured course. One-on-one mentorship is also available, students. One-on-one mentorship is also available. That is the beauty of this. Now, students, as you all are aware, you have to, whether you take the live this subscription for your those appearing for November 22 or May 23, they should take for 12 months. 12-month subscription is advisable. So May 23, November 23, please do tell them. Many students are asking, sir, but what will about the taxation part? Taxation part, don't worry. When I'll start on, say, October or for November 23 or May 23, I'm going to start in June, July. And on that time, they can opt for that. Okay, that should not be a worry for them. And please tell them to use the code CADS, because by using this code CADS, all of you are aware, they get 10% discount on the subscription, students. 10% discount on the subscription. This is what they need to do. Students, just if you can tell to the students. Yes, Mamta. Thank you. So if you can just tell to your students about this, today is a 20% last date. In fact, tonight by 12 o'clock it will end. So still 2 hours is left. So this 2 hours is left, students, and accordingly, herein if suppose some students of your or friend of your is there and they have got fast track, they think that they should be doing fast track, tell them to do the fast track. And same thing, what will happen is that 20% discount on the code CADS. But tonight only it will end, students. So you have got 4-month subscription, 12 months, 24 months. This is available. Please do tell them the same so that they can take the benefit. Okay. And for direct tax amendment class, Ujjwal, direct tax amendment class, today I did with Hindi part A. Same thing. Would you say what you will do tomorrow then? So 3 to 6 p.m. students, I am doing assessment. I have done the assessment, reassessment entire thing. TDS I will do, amendment of TDS. And the third one, student, amendment, reassessment I have done, TDS I have done, and the third one is time limits, which got reduced by virtue of Finance Act 2021. So this is a analysis that we have done. So please, in fact, you can just don't miss this chance of attending them again Saturday and Sunday. So I have ensured to ease out everything so that there's not much of load. So see you then tomorrow, students. See you then. Good night to all of you. Take care.